agua entra caliente acá y una vez que empieza a evaporar empieza a caer de nuevo y empieza a circular.
The entrance to the main stage is just with the wines. Sí, ok. Amazing. Ok. Y después cerrando los micrófonos mientras suben. 4. Yo tengo una mano. Well, thank you very much, all of you, for being the first attendees of this panel. Everybody that's outside, we're going to start. We're going to invite our next speakers of the panel that's about real-world assets and stablecoins. So I hope, hello, how are you? Are you good? How did you like the tango? You loved it? Yes, did you like it? Are you, it's first time here in Buenos Aires? Yeah? It's kind of a norm here. I'm local here, and it's very nice to see people coming for the first time. Yeah, very far. Well, thank you all for coming. I hope everybody that's outside start jumping in. I hope you like tango. I hope you like the food. Now we're going to start the second part of this conference, and we're going to start talking about real-world assets, stablecoins that succeed in the market. We'll have as a moderator Candelaria Font, the CMO of RealBlocks. Please come in. Thank you for coming. We're going to have as panelist Mauro Pascuccio, head of marketing of Ardua. No? Okay. That's what my bad. We're going to have Katie Wheeler, head of partnerships of On2 Finance. Welcome, Katie. Nice having you. And Mateo Moraguez from Twin. So now we're going to talk about what allows some real-world assets and stablecoins to break through and capture a market share. I leave you with them.
There. Thank you so much. So we are talking here about what's happening with the real-world asset and stablecoins market. As you know, in Argentina and in the world, is one of the top topics speaking today. So we're gonna start first asking each of you what truly drives markets adoption for real-world assets, right, and stablecoins, because it's something that maybe the crypto market is not so used to. So what do you think are the key drivers to make adoption of these two stable coins and real-world assets?
Yeah, of course. First of all, I'm Katie Wheeler. I'm head of partnerships at Ondo Finance. If you haven't heard of Ondo before, we're one of the leaders of tokenization of RWAs. We build both the infrastructure and the assets to bring finance on chain. We have about $1.8 billion in TVL across all of our assets. When you talk about the keys to adoption, I'd say that they probably fall under three categories very broadly. The first one is regulation and compliance. If you want institutional dollars to come into your protocol or into your assets, you need to make sure that you're following the local laws and that you have, the right things and checks and balances in place. The second, I would say, is trust and transparency. At Ondo, everything we do is audited. We also have a company called Ancora Trust that has third-party oversight. So they have read-only access into everything we're doing off-chain and are verifying that everything that we're doing is fully backed. And then the third one I would probably say is just, like brand UX. Like you have to make sure that it's easily understandable and people don't feel like they're going to get stuck somewhere, and make sure there's enough liquidity to facilitate whatever the action you're trying to do on chain is.
So what do you think about taking the opportunity we're in Argentina? I don't know if you're used to what is happening in Argentina with regulation, but how do you see Argentina like in the world map in terms of regulation and advance in that?
Yeah, so we, US-based crypto company, so our assets fall under two kind of buckets. One is a Reg D exemption, which means you are an institutional or qualified purchaser, and the other is a Reg S security, which is for non-US persons in the primary market. When it comes to working with Argentinian companies, we really rely on our local players like Ripio and Bitso, Lemon Cash, Bello to really give us the instructions and guidance on what regulation is doing, because it's forever changing. I would say that regulation is always a moving target depending on who you're speaking with, but Argentina is definitely leading, I would say, in Latin America behind Brazil.
Thank you. So Mateo, what are the drivers for you for market adoption?
Hello all, I'm Mateo, Head of Ops and Finance at Twin. I will present Twin in a minute just for you to know. We build infrastructure. Mainly we have two verticals that are stablecoins and real world assets, so this panel is like a clear fit for us. Regarding stablecoins, we have launched 4 stablecoins in LATAM. So we have the Argentinian peso, the Brazilian real, the Peruvian sol, and the Colombian peso. The idea for this is to have an infrastructure for wallets, for example, to launch in LATAM without touching fiat. So we would allow them to do an on-ramp, an off-ramp with us, and they don't have to be regulated, and they have to be regulated, but they don't have to do the on and off-ramp themselves. And regarding real-world assets, we have a license in Bermuda that allows us to tokenize from ETFs, stocks, different kind of assets. The particularity here is that we can sell these to a partner in the primary market, but that partner can sell those permissionless in the secondary market. And that's something that I believe it's pretty innovative. Regarding the question, I believe I will agree with Katie on most of their points. I will only differ in one regarding the UX. Obviously, I believe UX is one of the main things that crypto has to improve for adoption. But I believe that we shouldn't think UX of, hey, people trying to, we have to do a push on education, but we don't have to explain every single point to the user, So we see crypto, real world assets, stablecoins more as infrastructure. The user shouldn't see crypto in the UI, in my opinion. The end goal is for them to just be available, be able to operate, for example, to send a payment to other country without knowing what technology is behind, is powering that, but being able to do so and with low fees.
Thank you so much. Yeah, I truly agree with both. I'm leading the marketing strategy at Real Blocks. We tokenize real-world assets, and I study all the time what our users do and do not do. And there's always a problem in UX UI. It's actually always a problem that they don't understand, and we think that they should understand, but no, you never underestimate the user, never. So, Katie, how important are distribution and partnerships for scaling in real-world assets?
I might be biased because I'm head of partnerships, but I would say they're quite important. Distribution is everything. A great RWA product could be great, but if there's not meeting where the users are, there's not much utility on it being on the blockchain. So I think working with both regional and international partners for distribution is key because they know their markets best, they speak the language, they understand the culture, and you can leverage a lot of their understandings. So at Ondo, we work across multiple partnerships, both with public blockchains, infrastructure providers, chains, price oracles. We have over 150 integrations just with USDY, which is our yield coin, which is a permissionless yield-bearing asset, which is backed by short-term treasuries and bank deposits. And so without distribution, I don't think Ondo would have been very successful. So I think it's definitely a key feature and something that can really accelerate and give you a lot of momentum if you're working with the right partners.
Yeah, sure. So the soft landing and entering the user through partnerships is much better than a hard launch and saying like, okay, invest in me. I agree, totally agree with that. So Mateo, what advantages do on-chain commodity-backed stablecoins offer over traditional commodity markets? Where do you see the opportunity there?
Okay, that's a good question. There are many points to debate on that. For example, 24/7 trading and that stuff. I obviously would love to see that. We will see if that is even possible at some time, because could you imagine like companies having to be like 24/7 connected to see the markets, to see how everything's going? Like the CEOs would go crazy. So that's a clear advantage, but we'll see if we achieve that. Regarding other advantages, like for example, regarding stablecoins, for example, I see some players here in Argentina mainly that are not available to, because of regulations, to give yield to their users on their fiat. So if users have, for example, Argentine pesos in their wallets, they don't get any yield. And for example, with these kind of strategies, with using stablecoins on behind that obviously are backed up by sovereign bonds and that stuff, they are able to give yield to users. So at the end, those advantages are brought by the technology.
Yeah, so in the end, it's like mixing the two markets and pointing to two different targets, right? So the crypto adopters that already know the technology and already knows what's happening back, mixing up with the people that invest in real-world assets, right? Like without the technology. So I think, and we can discuss about that, like that we are like the tokenization and the real-world assets and the stable coins open up a technology to much more people and that do not know or that are not used to this technology, right? So what do you see about the your audience or your objective target when you're doing like this type of partnerships or when you're using this technology in real-world assets and stable coins? Katie, if you can.
Yeah, just continuing on his part about the 24/7 markets, and I think another big objective of tokenizing potentially gold, silver, gasoline, any other commodity is that you have global access. You also have transparent reserves, and they're programmable, right? You can use them within DeFi, you can use them as collateral. It basically gives the asset superpowers. So I think those are some other ones. The second part of your question was just...
Actually, what are you seeing in your experience about the target audience? It open up ages. Like, what are you seeing right now about your users and those stuff?
Yeah, so we have different products depending on the end user. So we have a lot of products that are for non-US investors. So they're Reg S securities. We work with a lot of local emerging market communities. What we have found is once people get access to a US dollar denominated stablecoin and they get comfortable with holding that, custodying it, the first thing that they want is yield on that, which is a very natural kind of progression. You can obviously go to DeFi, but there's smart contract risk and maybe people don't understand how DeFi fully works. And so that's why we invented USDY. So think about it as like you have a checking account, now you have a savings account where you're getting the risk-free rate on chain. with the Fed continuing to cut rates, that 5.5% risk-free rate is now sub 4%. And so now we're seeing a lot of our investors wanting to reach higher on that yield curve, and maybe they want to invest in a high yield fund or S&P 500. And so what the customer journey we have really witnessed in emerging markets is you have a checking account on chain, then you have a savings account on chain, and then you have an investing account on chain. And so it's continuing to blend both traditional markets and DeFi together and trying to take both. And then leveraging public blockchains really helps accelerate and access those people for anyone who has an internet connection and a smartphone, basically.
Yeah, so now we have talked about the user end. What about the teams part? So, Mateo, how are teams tapping into existing financial rails to integrate real-world assets into mainstream markets?
Okay, on that point, I believe we touched something that we talked before,
already, yeah.
partnerships. Like,
Yeah.
I believe partnerships are key on this market, because if we don't integrate with TradFi partners, it's difficult for real world assets and stablecoins to flourish, to have a real use case. So in that sense, I believe partnerships are key. What was the second part of the question, sorry?
How are your team like integrating into existing financial rails?
Okay, so yeah, currently at Twin, we are talking with different TradFi partners. I believe the first step would be to talk with wallets, because at the end, they are the like CeFi partners that are the ones that are more near to us, to our industry. But then definitely we should talk with gateways and banks and that stuff, because at the end, the real volume is still there. And regarding partnerships, I will give like an alpha on us, but this week we are launching ARGT, that is our Argentine stablecoin in Velo. So they are doing at the end what I was saying before, like they are using this ARGT coin to give yield to their users and to give real value to their users without caring about the technology behind. So yeah, that's the thing that I believe will improve stablecoin adoption and usage.
Thank you. So we have talked about the opportunities that this brings. But Katie, what are the main backdrops that you can see in the stablecoin and real-world asset market right now?
So we have about 300 billion of US dollar denominated stablecoins in circulation right now. That's less than like 1% of M2 money supply, so there's a lot of room for growth. I think of stablecoins as like the gateway drug to an on-chain economy. So once stablecoins continue to grow, obviously there's going to be continued demand and then new use cases for on-chain. We work with a lot of large asset managers. There was a few things that happened in the last couple of years that I think really paved the way for institutions to fully consider public blockchains moving forward. One was the ETFs passed. We saw the success of BlackRock's ETF. BlackRock launched the BUIDL fund, and now basically every top 10 asset manager is now launching a tokenized money market fund. We work with a number of them. And then the third thing was, Tether has continued to be the most dominant and successful company with a very small amount of people. And so I think these banks are looking at their business model and thinking, okay, this is too big to ignore at this point. And now because of the administration change, there's actually a path forward for people to issue these assets in a compliant way. And so oftentimes we work with these asset managers to kind of hold their hands and explain the value prop of public blockchains and how you can sell into a more crypto native audience and get that distribution for their products.
Amazing. So Mateo, also, what backdrops do you see in the market right now?
To be honest, I believe you touched all points that are relevant. But yes, I believe like institutions coming into, well, for example, tapping into a point that Katie said, I believe it's important that, for example, asset managers of Web3 companies like get into these instruments, these assets, because at the end they are missing the traditional instruments yields, and they have to do on ramps and off ramps every time. They lose money, they lose time, and this is, I believe, as Katie said, like the way to pave the way for institutions to come in.
Amazing, thank you. So to both of you, what new developments or innovations are you most excited about real-world assets and stablecoins?
I think I'm probably most bullish or most excited about the intersection of both blockchain technology and AI. Once all of these assets are natively available on a public blockchain, you can do a lot of interesting things with AI. So you could potentially have an AI agent who's automatically rebalancing your portfolio every 5 minutes based on XYZ, name your objective. So I'm very excited to see that. Once these assets are all live, you can also start to create your own creative financial products. So you could create your own SMA or ETF. Maybe you want a metals and mining ETF, X1, specific exposure. You can all do that on chain. Historically, if you wanted that, you would have to have like $50 million. You'd have to go through the process. It would take forever. And so now it kind of gives the retail end user a lot of leverage and creativity for what they can do on chain. I think in the next 5 to 10 years, we'll probably get paid like much more quickly. So I get paid every 2 weeks. Why can't I just get paid streamingly every single day and have that be paid in a yield-bearing asset? Save you a lot of work. So I'm excited to see how we can leverage AI and public blockchains to make financial products and new use cases more bountiful for everyone, right? The whole power of public blockchains is it's borderless, and so there aren't these walls anymore. Like we want Wall Street, but without the walls, right? That's the whole point of public blockchain.
Yeah.
So that's probably what I'm most excited about.
Atondo, are you doing something regarding AI with blockchain? Yes?
Amazing. I mean, it's something that's coming.
Yeah, totally. But I'm interested to see which experiments are the first. Like, we are seeing AI flourishing for more than a year now, like the boom between blockchain and AI. But I believe we still haven't seen any product that takes clear relevance.
Yeah.
So that's why I was asking, like, I was interested in what you were talking.
Okay, you too, Mateo. What are you interested in? What is coming?
Well, I believe that people creating their own portfolios would be like their own tokens, but around each portfolios. That I believe that's something that would be cool to explore. Also, we have seen, like, for example, BlackRock, they create models and that are rebalanced like every few months. And that's interesting. Like, I don't know many people that can access that kind of instruments in the traditional market. But if we tokenize those, we would be able to sell those to the retail, and retail users would be, at the end, accessing BlackRock's assessment. Because at the end they are defining those portfolios for which kind of investor are those portfolios. So I believe that tokenization allows us to create these different experiments that democratize investments for people.
Amazing. So if we have to do a ping pong and yes or no answer, what do you say? If we have to play. So real world assets or stable coins?
I think stablecoin is our RWA. I think it's the first RWA that found product market fit. So I'd say they're both true.
Both of them, yeah, that's true. So I guess.
No, I agree. Like, sometimes when people, I have to explain what we do for people that are not in crypto, not in blockchain. At the end, we tokenize things. Like stablecoin, it's tokenizing. At the end, it's not the currency, because we don't tokenize the peso, we tokenize the bonds, that it's better. Like, with bonds, you don't have any liquidity. Like, you have yield, but you don't have liquidity. Tokenizing bonds and having like the tokenized peso, you have both. You have liquidity and you have the yield. So yeah, both would be real world assets.
Yeah. Okay, thank you so much for your time here and to spend time with our questions.
Thank you for having me.
Thank you.
Gracias. Well, thank you very much all for coming and speaking about your experience. Stablecoins are for sure one of the most interesting or most adopted parts of crypto nowadays. It's the merge between the real economy and the users and the technology. Now we're going to go with our first keynote. We are going to talk about DeFi Mullet with Bitcoin. We have Jacob Phillips, co-founder of Lombard, and he will have 15 minutes to explore how on-chain Bitcoin and DeFi at large can compete with centralized finance by delivering seamless user experience that make blockchain invisible to end users. It was very difficult for me to say that. Thank you very much. I will be paying attention. Jacob.
All right, hey everyone. Let me just see if I can figure out how to make this work here. I gotta point it this way. Okay, all right, perfect. Okay, hey everyone, I'm Jacob Phillips. I'm one of the co-founders of Lombard. Lombard is building the Bitcoin module, or so I called it here. This is a little bit of an ode to modules in the Cosmos SDK. Of course, you know, kind of the reason we're all here. The original Cosmos SDK was predicated on this idea that you could plug and play with all these different things that you might want within your blockchain. Now, for the first time ever, through Lombard, I think we finally have a developer primitive good enough for Bitcoin to be plugged into any chain, or more importantly, any application. So, you know, one of the ways we've always thought about building at Lombard is, you know, that there are different phases of the cycle. So, you know, Bitcoin DeFi has always been this obvious opportunity. I spent 3 years at Polychain investing, and you know, this is like early 2021. People were always talking about this opportunity, but it never quite came to fruition because I think people were building in the wrong order. People were starting with phase 3. They were trying to build trustless applications, Bitcoin-only environments, when really what people wanted was proof that there was demand for Bitcoin in existing ecosystems. And then now that we've sort of proved this out, now people want a really good developer primitive that any application can plug into. Put another way, users want to use, you know, Aave and Hyperliquid. They don't want to use, you know, the 5th fork of Aave on some Bitcoin-only chain. And so this is another way of framing the opportunity, but the most important part of all of this is that there's this end goal of permissionless innovation on BTC, but in order to get there, you have to build things up gradually. And the most important thing, you know, Lombard launched LBTC, you may know us from this. It was a liquid staking token. It went 0 to $1 billion in 92 days. Maybe the fastest anyone's ever done this, faster than Athena, faster than Lido, faster than EtherFi. And yet there's still so much more we need to do before we can even really think about creating, you know, these Bitcoin economies that we think will start to sustain themselves. The most important middle phase that we're calling Bitcoin capital markets is the idea that we need to hyperscale liquidity for Bitcoin on chain before a lot of these, you know, a lot of the innovation can happen. There's this idea in my mind that eventually you'll see like the next EigenLayer or the next Athena come directly from the Bitcoin ecosystem because of, you know, Bitcoin has the, you know, the biggest community of all crypto and arguably some of the most principled developers that I think are the types of people who will come up with the next great innovations, but they never, you know, innovation has never really been a priority in the Bitcoin space until very recently when we started to see the culture change. So a lot of the buildup here is really about changing the Bitcoin culture such that, you know, something like $6 trillion of value created on top of BTC could be possible. Okay, so maybe I can skip ahead really quick here. Okay, all right, ignore a little bit of this. I just want to talk about this graphic on the right, because this describes the Lombard stack. I think it's important to have this context. So when we were building Lombard, we were originally building an asset called LBTC, a liquid staking token for Bitcoin. However, in the process of doing that, we happened to just build all of this infrastructure that was necessary. So we had to build a security primitive at the base layer. So we built a Cosmos SDK chain that was secured by 15 of the largest institutions in crypto. So Kraken runs a node, OKX, Galaxy, DCG, these kind of folks, including some of the biggest staking operators. Then, you know, we wanted to distribute this. So we minted LBTC on many of the major ecosystems. So it became this cross-chain primitive that can be minted on ETH and Solana and Cosmos ecosystem and wherever else. And then, you know, we had a distribution layer. So we built all these sort of yield products and primitives to make sure that LBTC liquidity was deep in DeFi. And then last, we built this Lombard SDK that was something that sort of wraps it all together. But the whole point is now we've realized that each of these can sort of stand alone as their own product. So, you know, the security layer has applications beyond just Bitcoin. The middleware solution, that sort of developer layer has, you know, many more types of integrations beyond just a liquid staking token. And of course, the vaults can go in many directions. So apologies, we're skipping back to the beginning here. Okay, so before Lombard, just a liquid staking token. Liquid staking tokens are great, but they're not great for everything. Turns out, for many use cases, a Bitcoin wrapper is required for two reasons. One is Bitcoin wrappers are just a much more clean version of doing transactions. So like if you are ST-ETH, amazing primitive in the ETH ecosystem, but nobody trades it. If you want Bitcoin spot trading to come on chain, you need a plain Bitcoin wrapper. And the second is, even in a collateral use case where, you know, I think LBTC thrives because it's naturally more capital efficient, sort of has yield embedded into it, BTCB or some Bitcoin wrapper ends up being the simpler form of this. Even though there's only a tiny bit of risk embedded in LBTC in the form of a staking, you know, rather a slashing risk that's less than 1% of capital committed, there's still some risk, so people want that, you know, sort of a risk-off alternative. So we view these two as like symbiotic. There is a liquid staking token that's sort of a capital efficient collateral, and this, you know, Bitcoin wrapper that has sort of come into the mix. And so, you know, one of the things when we the sort of story of all of this is Avalanche had a Bitcoin wrapper that was ubiquitous throughout its own ecosystem, doing some of the coolest stuff I've seen in all of Bitcoin DeFi. That is because there was one uniform Bitcoin asset, all the applications were able to build as if that was the native Bitcoin, i.e. BTCB on Avalanche was secured by a consortium that effectively had similar or what people would view as the same trust assumptions as the underlying chain. So if you trust the Avalanche chain, then you by default trust the Avalanche Bitcoin, which is pretty cool. That enabled very native Bitcoin experiences. So, but I guess the downside of this is that it was only existed in the Avalanche ecosystem. So liquidity was minimal. You know, if you know, many applications now are thinking about other ecosystems, what a cross-chain world looks like. Apps right now are driving distribution, and that asset in isolation wasn't a good enough distribution source. So there was this perfect opportunity for Lombard, who was looking to get into the Bitcoin wrapper game, and Avalanche to sort of partner on this. So kind of a cool deal. I think it was sort of the first of its kind in DeFi. I don't know that anybody's really acquired an asset of this size. It was like a $500 million deal. And the most important part of this is that BTCB to us is a developer-first Bitcoin wrapper. And I don't think this exists anywhere else in the ecosystem. If you want to build with exchange wrappers, you have gated minting. So you can't actually allow like a user who brings Bitcoin to your application or chain, they, you know, more often than not, they're not able to actually use that on chain. They have to, you know, either go swap through an OTC desk or you know, maybe they're one of the like, you know, 10 permission minters or something like that. And then, you know, a lot of these wrappers also have high fees. So BTCB was meant to just be this developer primitive, and I think we'll get into this a little bit later. But the reason a Bitcoin developer primitive matters is that DeFi is for the first time ever competing head-on with centralized finance. This is abundantly clear. If there's any chart in all of crypto you want to bet on, it's this one right here. I don't know if there's a poly market for that, but there should be. And then this is Hyperliquid on the other side. In fact, Hyperliquid, probably one of the best Bitcoin DeFi applications. People don't think of it that way, but native Bitcoin deposits directly to Hyperliquid. It shows up on the spot exchange as BTC. We'll get into this more later, but that I think is the optimal outcome. So in the midst of this, the question is like, you know, what does this bring us to? This was all of our growth. We're crypto natives and retail in a lot of ways. We sort of, you know, set up the DeFi ecosystem, began to bootstrap it, but you know, I think since I first got into crypto in, you know, 2019. I have spent most of my time in DeFi, and I'm like only beginning to wrap my head around what this shift is going to entail. Before, I was in the camp of, you know, DeFi purists where UX really didn't matter at all. We were sort of focused on building for a very narrow set of users. Now, over the next, let's call it, you know, 12 to 24 months, almost all of the growth, and I think growth on orders of magnitude that we're only beginning to comprehend, is going to come from institutions and fintechs. And so what this means is that, you know, we spent years building these protocols and applications that now have a totally different user base, perhaps. Once all of these apps were B2C, people were going directly to applications to trade and borrow and all this stuff. Now, DeFi is actually just a backend for all of these, all these fintechs, apps, and institutions who are serving products to their users. And I think this is an important shift and one that Lombard is specifically built to be. When you think about the Bitcoin module, the module itself is on the back end. Any user who wants to, rather, any developer who wants to build this kind of application now has the ability to do so. So, you know, real quick on this one, for the longest time, we sort of internalized the idea that UX didn't matter. I mean, you know, these are two of the best applications in terms of UX, and you see just how many different Bitcoins there are. This is confusing. At the end state of what we should arrive to is something that looks exactly like centralized exchanges. It should be, you click deposit, you send, you know, it shows you a BTC address, you send it from wherever you have it. You send it from Binance, you send it from your ledger, you send it from another Bitcoin wallet, and it shows up in your account as the orange coin, not as, you know, one of these 15 other coins here. And I think this is the UX that, you know, any fintech would demand. There's no way you're going to get by if you have all this fragmentation and all these different tickers. And so even though BTCB, you know, has its own branding and has some history, my fundamental pitch to every fintech and institution out there is you shouldn't be calling this BTCB or Lombard BTCB or whatever. You should really just be calling it Bitcoin Orange Coin, because that's, you know, it's Bitcoin powered by Lombard under the hood. I think I have, yes, okay, perfect. So, and you know, the way I usually frame this is like, think about a centralized exchange. Think about, you know, Bybit, of course, is sort of an easy one to give a pitch for here because the hack that happened recently. Everybody views Bitcoin as native Bitcoin on a centralized exchange. Most of the Bitcoin activity happens on centralized exchanges. You see a lot of trading activity, a lot of borrowland, but how is this any different from DeFi? I mean, fundamentally, DeFi has some form of a custody layer. Either you're using smart contracts or some sort of custody primitive. For Bitcoin, we have to have this intermediary layer to have any form of expressivity. And then you have, you know, tokenized assets in the same way, you know, on-chain, we have a representation of the asset just the same as Bybit or another centralized exchange has a representation of that asset on the exchange. And then you have some utility layer. You have trading products, earned products. You can use, you know, your assets as collateral. And so there is, at this time in DeFi, a sort of unbundling of the centralized exchange that's happening via each of these different layers. And my belief is that, you know, we can build institutional grade security primitives for BTC that are as good, if not better, than centralized exchanges right now. And if that's the case, then we can, you know, the goal here is if we could, you know, replicate the same asset structure and create UXs that are as good, if not better than centralized exchanges, you can compete head on. Hyperliquid was the first to do this at the execution layer, certainly. I think they have some ways to go on the security layer. But I think this is a really powerful idea where every, you know, on-chain application now has an opportunity to be as good, if not better, than a centralized exchange, just a matter if they are kind of building with the right infrastructure. You piece a couple of these together, and you get, you know, the exact same stack that, you know, that a centralized exchange has. So, and one of the ways we do this that I think is really powerful is like, we wrap this all together with an SDK. So each of these layers sort of lives independently. They have different functions. The goal is to make this super easy for app developers so that if you want to create a, you know, Bitcoin-backed stablecoin borrowing application or something like that, very similar to the one that, you know, Coinbase created with Morpho, you can do this with, you know, a few lines of code or something like this. This is the dream, is that all of Bitcoin is served directly to users through applications. The applications, arguably not the chains, are the ones who are driving demand these days. And so now you can go to Aave or you know, a PerpDex or whatever it is. You go directly to their application, click deposit. You don't even know that there's, like, you know, bridges and other infrastructure in the back end. Certainly the apps, it's, I suppose, their job to do the due diligence to you know, decide who's sort of institutional grade you know, security in the back end. But all of this allows any application to serve Bitcoin or any other asset directly to the users through the app. So then, you know, no more like clicking from this tab to do all these things. And I think that's it, but I had one more slide that I was working on last night, which was just sort of the implications of this. I think BTC-backed stablecoin borrowing is one of the most important things. I mean, everybody's excited about stablecoins right now. People forget that BTC is sort of the sort of powering mechanism, I think, behind a lot of these economies. All of the yield on chain comes from some collateral. You have, you know, $2 trillion, maybe one day $20 trillion in crypto native collateral that's ready to be, you know, placed as collateral to borrow stables to then power the ecosystem. So I think Bitcoin has a really powerful place in the stablecoin yield space. Bitcoin spot trading, one of the biggest opportunities, almost exclusively exists on centralized exchanges, is just now beginning to come on chain. I think you saw Hyperliquid have a couple days that were, outpacing Coinbase and, a significant percentage of what Binance is doing BTC spot trading. So certainly that's going to come on board. And, for the first time ever, I think we're at the point where there is light at the end of the tunnel for this sort of developer renaissance that I talked about at the beginning, where it was so hard to build with Bitcoin for a really long time. We thought the answer was, kind of isolated environments or like fully trustless solutions. Now we're at the point where we kind of know what the UX needs to look like. We know what the end state is. We know who has the distribution, fintechs and instos coming on chain. And so we are serving them products that sort of go along the lines of this like 75% CeFi, 25% DeFi, where we minimize the sort of surface area of DeFi to just the most important parts, permissionless and kind of trustless transparency. And if you bring those on board, I think you'll see just a massive proliferation in the amount of people who are building with this kind of app. DeFi on the back end, CeFi on the front end. So that's the gist of it. Obviously, there's a lot more to go through on any of these topics, so happy to pick up the conversation with anybody who wants to have it. Thank you.
Well, amazing. Thank you very much. I agree thanks. I agree in the point that for new adoption, you have to make it easier for people and to create less friction to new users. Thank you very much again for the keynote. We're going to have our second keynote of the day. Today in this second keynote, we're going to listen to the perspective of financial institutions and for the more corporate part of this conversation. We will have Michael Kirchner, Associate Partner of McKinsey, talking about the financial institutions sentiment on stablecoins. Welcome. Thank you very much. The speaker, yes. Sure. There you go.
Hey folks, good afternoon. I will just start by saying that my last name is not any relation. It's great to be here. Hope today is going great. My name is Michael Kirchner. I'm an associate partner with McKinsey & Company out of our New York office, and I serve clients across the traditional financial institutions. So think about this: retail banks, payment companies, credit unions, some wealth techs. And so what I wanted to come and speak about today is a little bit of just the FI approach, right? How is TradFi thinking about the Web3 space, about crypto, about digital assets, and some of the specific surveys that we've actually recently ran on that. So I'll cover this in 2 chapters. The first is just really around kind of the evolving digital asset landscape, right? What we're seeing, what am I talking to clients about on a daily basis across the world, specifically in the United States, but across other regions as well. And then the second chapter will be a little bit about the sentiments themselves. So let's jump into it. It would not be a crypto presentation if I did not have an up and to the right slide. And so, if we ignore some of this here, it is certainly doing the up and to the right. And so at a market cap at around 4 trillion, right, I think it's obviously very clear that it's dominated by crypto. But that's not really the aspect that's getting a lot of the traditional financial institutions very excited, right? It's some of these lines down here, right, that while they're not large in stature right now, they're growing significantly faster than the broader crypto space, right? So tokenized securities as an example, right? Stablecoins, I did not specifically have as a line on the chart, but that's growing about 20% year over year. I know Katie was mentioning earlier around 300 billion in market cap, right? 312, I think, when I checked right before coming on stage. And that is really the settlement leg, right, for a lot of these tokenized securities. And so that's driving a lot of the growth and a lot of the excitement when I'm talking to my clients on a daily basis. And so there's really 3 kind of key areas, right, that these financial institutions are excited about. It's not just the assets themselves, which is obviously an exciting opportunity in terms of development, right? It gives investors new ways to allocate and get access to previously illiquid funds, which is plenty of examples as it relates to Bitcoin ETF and more complicated assets. I think the middle piece is quite interesting. Every single financial institution is thinking about their ROE and their ROTE, right? So how can they take out some of the costs that exist from just a reconciliation and a back end? And so some of those operational efficiencies and capabilities that crypto and on-chain finance is able to provide is really quite exciting for them. And the third piece is just around the infrastructure, right? And so as it relates to what does it take to issue, to trade, to custody tokenized assets and their respective underlying instruments, right? This is opportunities for plenty of entrants in the space to help serve these financial institutions, right? When I'm talking to my clients, there are plenty of questions way beyond just the 101, right? In terms of like, if you went to even before that, right? So like the very basics of what is a stablecoin and what is a tokenized deposit, we're constantly trying to, get them just to that base level. And so I think there's a lot of opportunity from an infrastructure perspective to support these types of traditional financial players in what they want to do. And so how are they thinking about it? I wouldn't be a consultant if I didn't have a simple kind of two-legged framework here. And so there's two approaches. I'd say a lot of the banks that I speak with are very much on the left side of this screen here, right? So they're thinking about, okay, how do I just defend, protect? There's something new, there's something scary that I do not understand, right? So how do I think about mitigating some of the impact, right? And so I want to avoid some balance sheet leakage. I want to avoid my deposits going off that balance sheet, right? I want to make sure that I have some of the foundational capabilities so that if the line keeps going up and to the right, I understand what to do about it and I'm not chasing and I'm super far behind, right? And I want to take out some of the costs associated with it. On the other side, some of the larger financial institutions, some of the GSIB, so your large global financial institutions, are actually looking at this as an opportunity to capture and steal share from smaller FIs and less sophisticated financial institutions, right? By launching new products, by partnering with Web3 native companies to kind of take advantage of that opportunity. We're really thinking about like liquidity and efficiency that they can get from that. And expand some of their customer reach, right? I think some of the most obvious use cases, which I'll show in a couple of slides, really around cross-border, and so some of the largest global financial institutions are really using that as a big opportunity, right? So offensive, defensive, very classic, but really that's how we're seeing it, and a lot of them are sitting in defensive. Most of my conversations with CFOs, they are asking those questions of, how do I avoid some of this balance sheet leakage, right? Not thinking about it as an actual opportunity. And so I think there's an opportunity, for this group here, right? How do we think about changing some of the conversation, right? Getting the 101 there and then kind of taking it to the next level. It's not just defensive. You can actually, steal share with this. And so, want to just tee up a couple of questions that we get on a daily basis. Some of this may be relevant to some of the conversations that y'all are having or just thinking about from a space. First, maybe less so, but governance. I'm having a lot of conversations with executive teams on who should actually own this, right? Should it sit within the leaders of deposits or digital? Should it sit within IT? Should it sit within a strategy function, right? So how do you think about that kind of cross-functional ownership of where do you go and have the conversation, right? What's the actual like the 101 in the training? So you can think about all the traditional finance, channels, right? Whether it's in a branch, through a mobile app, calling a call center, right? How do you make sure that those folks are all ready to have the conversations needed, right? And are there any new governance bodies to monitor new regulations, whether in their jurisdiction or beyond, that might then come to them, right? So there's a lot of questions that they're asking around governance. The second is finance, right? So talked a lot about balance sheet, but there is quite a bit of fear from CFOs around, what are stablecoins going to mean for them, right? And so, should they go tokenized deposits? Should they go stablecoins? How does that actually impact them? And how do they think about kind of the yield opportunities of this based on different regulations? There's a lot more detailed accounting and general ledger types of pieces, but I won't go as much into that. From a risk perspective, I think risk, fraud, compliance are all very top of mind, right? And so how do they, as banks and financial institutions, think about updating their risk taxonomy, right, to make sure that that fits into it? And also just from a TPRM, so third-party risk management, onboarding new vendors to help them with these capabilities is relatively stringent in nature. And so there's a lot of questions there. Quite a few questions around AML, transaction monitoring. I think a lot of my clients typically ask, what are the vendors that we can use to help enhance our existing capabilities? They're very comfortable with traditional financial AML and transaction monitoring. But when it goes beyond that, they don't have a good sense of it. And I think there's plenty of opportunity to kind of upskill and provide opportunities for banks there. And then finally, on tech, there are very few of my clients that are thinking about building this themselves and building the blockchain technology or even kind of dipping their toes into it. And so they're constantly looking for vendors and partnerships. So, PNC partnered with Coinbase to kind of launch their crypto as a service. And so there's a number of those types of moves that are being made in the space for folks to kind of go into it. Awesome. So that's a bit of the questions. We recently did a survey of about 20 or so of our largest kind of clients and financial institutions that we work with. And wanted to share just a couple of those key messages that we've heard and seen from the space. So there's a lot of excitement around it, but what does it actually mean in terms of how folks are thinking? So we asked, for their clients today, what's the most exciting, use case? What's the most value that they think they can add today? And 86% of them said that, faster cross-border settlement is the most obvious use case for them. I think that's likely not going to come as a surprise to anyone in this room here. But there's plenty of inefficiencies as it relates to the traditional correspondent banking system that stablecoins can offer, right? And so as you think about the initial use cases, this is very top of mind for all of my clients. But it's also important to note that not every traditional financial institution actually has a lot of flows going cross-border in different corridors, right? So there's a number of regional banks in the United States where cross-border may not make as much sense because most of their customers and retail customers are just in the United States. So while it's an incredibly exciting one, it actually won't fit for every single client. So that's today, right, asking about clients. But we wanted to look in terms of kind of the future of where that's going to change. So I'll focus on the right-hand side of the screen here. We asked basically, what is the status of your stablecoin use cases that you are using and rolling out today? And so, they're starting with very core just payments capabilities of how do we enhance our payments infrastructure, right? So you can see real-time B2B payments and cross-border payments as, what they're currently offering the most. But I think what's interesting is as you fast forward 12 months, right? So we're standing here 1 year from now. What are the opportunities that they're most excited about? It goes from beyond just the payments, so there's of course more adoption there. But you see quite a few things around digital wallets and just the broader infrastructure of stablecoins, of how to actually use this as a settlement layer. And so I think when I talk to my clients, we're having a lot of conversations at the top, but I'm encouraging them to think about what is the next horizon beyond that. And so I think there's a lot of opportunity for Web3 native organizations to actually support those other use cases and help accelerate the build and deployment and rollout of those to their clients. Now, with all the excitement and all the questions that I talked about earlier, there is one thing that sticks out. It's that the readiness is certainly not there. And this across a number of different parameters, right? And I think the most important ones to call out here, one from a compliance and risk perspective, and the second in terms of balance sheet implications. This is really where the fear lies for these organizations. And so, readiness scale 1 to 5, over half of these organizations that we surveyed said that they would put their readiness for these stablecoin use cases at a 1. So they want to move into the space. They want to, get moving. They see some of the value for their clients, but they are very worried and don't really know where to start from a compliance or risk, a balance sheet implications perspective. And so as you think about having conversations, as we have conversations, right, getting them up to the basics of how do we actually think about this space and what's actually the opportunities that are afforded in the Web3 space with relating to compliance and risk and the auditability of on-chain transactions, right, is really important for them. The final piece that I'll touch on is because of this readiness, or perhaps as a result, is that there's not a lot of funding for these FIs being dedicated today, right? And so over half of the folks that we surveyed said they have less than $1 million that they're actually dedicating to this. With a number of priorities across financial institutions, I think top of mind right now is agentic AI and how they are trying to take out costs and also improve customer experience, right? There's a lot less money being dedicated to digital assets and stablecoins and some of the Web3 initiatives that they could roll out. And so I think that's leading to some of the challenges as it relates to the readiness. But I think it's just interesting, right? How this will change over the next 12 months. A lot of my clients are starting to actually carve out more budget to say, we need to actually invest in this. If we only have less than $1 million, we're just going to be in pilot purgatory. And so we want to move beyond that. And so I think, as in closing, right? I'll stay on this for closing. In closing, there's a lot of excitement from traditional FIs to understand the opportunity here, right? They have a lot of outstanding questions and don't necessarily have the most money, but they know that they cannot build this alone. And they're constantly looking for partnerships, across the ecosystem, whether it's compliance, whether it's custody, whether it's just some of the financial balance sheet implications, right? They're looking for partners to understand how do we actually do this. So a lot of opportunity out there, and hopefully a space where we can see some convergence and ultimately get more on-chain. So thank you very much.
Well, thank you very much. Thank you very much. And thanks that you made sure that you're nothing of the Kirchner, because it would be a problem. Well, thank you. Thank you very much for that impressive presentation. Now we're going to go to a new panel. We're going to go back to the panel. We will need four 4 chairs, please. Okay, 3 more. So how did you pass the morning? How's everything going? Yeah. Who's first time in Buenos Aires? Please, hands up. Ah, okay, almost everybody. So how long have you been here? Just shout. 3 days, 2 days? 3 days. What's the best thing about Buenos Aires apart from Buenos Aires? La carne, yeah, amazing, no? Dulce de leche, yes. Alfajores, did you try alfajores down there? You should, it's another sweet that's very important for you to try. So meat, alfajores, and mate. Anybody has been in Def Connect? Yesterday they were like small mates. Yes, yeah, okay. Well, mate is kind of a Red Bull, but a bit more healthier. So the next panel is about government and regulator playbooks from LATAM to the world. We're going to receive as a moderator Ignacio Rivera. He's head of product of Reown. Vayan viniendo un poquito porque están muy lejos. Anybody speak Spanish here of the crowd? 1, 2, okay. Sorry, democracy will be made this in English. The other, buenos días. The other, Joaquín Fagalde, CEO of DPay. Ramiro Furtado, CFO of Manteca, sorry. And Federico asked, that's roundabout, he will, no, okay. So we are the three of you, thank you very much, and I leave you to the panel.
Okay. Listening well, yes, fantastic. Okay, we're going to be a little less of people than we were at the beginning, but no problem. I'll introduce myself. I'm Nacho, nice to meet you. Born and raised here in Argentina, living now in Barcelona. Head of product at Wallet Connect. We've been working with many chains over the last couple of years, and today I'm here to pick the brain of these people who have been doing a lot of work in Latin America, working where regulations are not just there, where it's a mess. Regulation sometimes in crypto is a bad word. People don't want that, but in reality it's something that we need because it's a little bit chaotic. And there's a lot of people doing regulations without actually doing the work. They think they know how to do things, so here we have people that actually do things. So yeah, maybe you take a couple of minutes to introduce yourselves and we can go from there. We have by the way, we have also Federico, MVP of the Uniswap tournament. By the way, welcome.
Thank you very much. You have studied many years, build a project, and then everyone recognizes you because of, a football game. Long story short, become a football player, that's what you have to do. Yeah, thank you. Happy to be here.
So maybe Joaquin, as an icebreaker, how has been the regulations shaping a little bit what DPay does, and how's been your experience expanding into so many countries like you've been doing?
Cool. So first of all, let me explain a little bit, an overview of what we do, so everyone understands. We're DPay, and we are actually connecting different QR payment systems around the world. We are starting here in Latin America. We are making payments in Argentina, Brazil. We launched Peru, and now is Bolivia and Colombia coming. So we'll end the year with 5 countries and we actually enable banks and wallets to make payments everywhere with QR codes, right? So from the crypto world, we work with Binance, Bello, Ripio, RTM, Satoshi Tango, etc. So different crypto clients that are operating here, and they use us to make QR payments using stablecoins in different countries in Latin America. So from our perspective, regulation is very important because we actually enable these crypto wallets, let's say, that are coming from Web3, and we actually are connecting that world with the Web2 or the fiat payment rails in Latin America. So we are touching a lot of banks, we are touching a lot of different regulations in different countries, and for us is a must being compliant, work with regulated entities, financial entities in different countries. So regulation is a very important point of what we're doing, and it's one of the, let's say, the backbones of what we're building is based on that. Because if regulation changes, if regulation approves you or not, it depends on that we choose where to open a country, right? So it's a mess, right? different countries has its own regulations. Not every country has a regulation. In crypto, happens a lot where you have a lot of countries in Latin America where you can operate, but then you find yourself in a gray spot where regulation is not defined, so you are not doing any legal thing, but then also it's not regulated, so maybe banks tell you, hey, but you're not doing any regulated activity here, and you try to explain them that it's not there's no regulation, that's why you are doing that, but there's no illegal at the same point. So yeah, that's a constant, let's say, battle, right, on our end. So I think also that from what we're seeing is that countries are trying to create a regulation or at least like an MVP of a regulation to enable companies like us, for example, or even bigger companies, for example, dLocal, all those guys that are they've been working for years, using stablecoins, moving money around the world. They're doing also unregulated activities. They're operating on a gray area as well. So coming from that, and now there's a lot of constant innovative products, right? So I think that regulators are seeing that they need to do something about that, right? Before there were maybe one or two big players, now you have like hundreds around the region, and they're trying to create that. In Bolivia, they're trying. In Argentina, they're trying. In Brazil, they're trying. Maybe in Peru, something is going on there. Colombia and the rest are maybe one step behind, but at least they're trying to do something about that. So that's what we're saying.
And Ramiro, you guys have expanded to more than 10 countries. Maybe we can tell a little bit about Manteca and like from what Joaquin is saying, what resonates with you and your experience.
Yes, hi everyone. It's a pleasure to be here. I'm CFO of Manteca and co-founder. We started back in 2019 with a different background. We started with an FX license in Argentina, which is probably something that I wouldn't recommend anyone to pick. And from basically due to some FX controls that we had in 2019, we made the decision to pivot into the crypto business, and then further on we started offering APIs for crypto, FX, brokerage, and payments in Argentina, and then we opened nine additional countries, which is basically Brazil, Mexico, Peru, Colombia, Panama, Costa Rica, Chile, and Philippines. In terms of regulation, we are hugely regulated because it depends on which of the product that you offer, you have a different regulation. And the way I think about regulation is that it should be a blueprint or a map towards building something that really lasts. So I agree with the view of Joaquin. I think it's needed. I think there's much more work to be done between the private sector or the entities and the governments at some point to build a framework that really helps the end user. If we pick up the picture over the last 15 years, I mean, we've seen some incredible companies grew up significantly. So Nubank has more customers than the entire Colombian banking system. Mercado Libre has more virtual accounts than any other player in Latam. And then there's huge companies, and there's over 3,000 fintech companies in Latam. So I believe we are experiencing, as a Latam market, a booming period in terms of fintech, but it needs to have some kind of framework. I'm not really sure, and maybe I can open the discussion where it should be something related to the Mercosur to build a framework which is across all markets, or it should be individual for each of the markets. That's a bit of my experience.
For sure, and it's like Latin America is very different in every country. And maybe, Federico, we can expand a little bit from your experience, because Kleros does something very particular, a little bit different to what these guys are doing. And you also bring much more experience than the one in Kleros. So maybe shed some light on how this affected on your side the lack or the lack of regulation in these cases.
So thank you for having me here. We started in 2017, and our initial goal when we started was to try to build a dispute resolution system to disputes that were happening in the crypto world. Like you, for example, you were a designer from Argentina or a web developer, and then you have a client in Germany, and then the guy could pay you in Bitcoin or crypto and circumventing all of the problems, with the capital controls, everything, what everyone knows here. But if they didn't have some way to resolve a dispute with you for your website because of the quality, they wouldn't hire you because they're not going to go to court against you in Argentina for $1,000, website. So what we built in the beginning was a system that could we use as an escrow where people would put the money and then you make the website, and then if they are happy, they release the money and they have the product. If not, they can go to trial and Kleros will pick jury that will evaluate the evidence and they will vote on who is right. That was the initial view. It was like a tool for the crypto industry. That didn't really materialize because we didn't have enough users in crypto. We didn't see people building decentralized, e-commerce, decentralized Uber, decentralized Airbnb as we expected in the early days. I think it will happen, but it hasn't happened yet. So what we started doing is to start working with institutions and traditional companies. Like for example, we work with Lemon, the crypto exchange from Argentina. If you have a dispute with the company, and the customer service will not reimburse you because they think you are not right. They offer you to go to Kleros to have a third-party neutral, decision on your case. We work with the government of Mendoza, and they use Kleros for support in making decisions in small claims, in neighborhood disputes, and we work with insurance companies. So we kind of pivoted a bit to the real world situations, and we have experiences in interacting with regulators also this is a very different method of dispute solution because it's based on crowdsourcing anyone. So we kind of have lots of questions about, well, is this binding? Is this valid? In which country? And what happens if the jurors are from different countries? And so I can tell you a bit later on how we have approached the problem, but this is a bit of our background.
Oh, fantastic. Maybe to expand a little bit more on that, because you said you started with the more crypto companies and suddenly you're working with Mendoza's government. So what's the misconceptions that they usually have about these decentralized dispute systems? How can they wrap their mind around it to actually understand and try to put it as part of something that's for the everyday use almost?
I think you need to put it in words they can understand and try to put it in boxes that they understand. So how can you pitch this? Okay, so this is a citizen jury. It's an app that will choose citizens of Mendoza to resolve Mendoza cases. So this is, you're not going to have a jury, a real jury for a $200, dispute with a company or a credit card, or a small, a car accident for repairing the car will cost $1,000. So what if you can just make a jury online very fast with citizens of the neighborhood, and they will resolve the case in 2 days, and it will cost the government $50. That makes more sense to them, and they don't even need to know this is crypto. They know it's blockchain, but that's not the value proposition. No, the value proposition is it's fast, it's cheap, and it's transparent.
Suddenly, when you hit those words, people open their eyes and say, "Yeah, this is what we need." Manteca as well, you offer a variety of services. It's not it's one solution. So how have you seen how these different regulations on the different services that you provide maybe have been a complication, or have you been strolling along correctly? How have you seen that?
I definitely think that's part of our story. We were born with this FX platform, which basically provided the opportunity to buy dollars at a cheaper rate than the banks. And with all the capital controls, automatically we needed to pivot and move into other businesses so as not to die, basically. So that's when we launched the brokerage service, and then automatically we decided to move into crypto. And when we started working on the crypto exchange, we started getting some customers which were actually requesting to move on the payment side. And then some customers, additionally, they requested to open our business in different countries. So I think it was kind of a cascade, and it was automatic for us to make the right level of steps so that we could actually end up offering our services in 4 products and 10 countries and having more than 300 transactions every month and over 2.5 million retail customers today.
It's quite an impressive thing. Like it's also quite humbling being with 3 founders here. But Joaquin, from your founder experience, like how regulations were incepted into your products, and did it change the way you looked at the problems that you were solving, or it was more something that you had to force after the main idea was conceived? Like how did you address this?
No, so actually we started doing something different. We're building crypto payment rails for more than 3 years now, but we spent almost 2 years building that rail in Latin America and selling it to acquirers, so POS companies, right? For merchants, to enable crypto payments at merchants at scale, right, with our APIs. Then we pivot, or it's not like a pivot, but we added a new product, a new use case based on the same rails, focused on banks and wallets, and that's how we came here. That's how we came to this new, let's say, latest product about payments in Latin America. And yeah, it's not something that you just like dream of, and it's not like a line, right? It has a lot of curves. It has maybe a lot of changes in the way. So at least for us was not that linear. Yeah. Every step helped to do the next one, but we definitely were not thinking about making QR payments globally 3 years ago. When we started
discovering as you go and understanding like how's the landscape.
Yeah, and the market. We were too early in the market, for example.
Yeah.
Enabling crypto payment at scale was like maybe too early at the time, right? Maybe nowadays makes more sense, but so yeah.
I think when he mentioned that the road was a bit bumpy for DPay, we also had a quite a tough experience back in 2020 when we decided to launch a platform which really lasted, I would say, 90 days. We were the first ones to actually bring the information from 7 banks, Mercado Pago and Walla, into a single and unique web. And basically, after launching it in 1 week, there were 30,000 customers which registered. But then we received 7 what we call like legal letters from the 7 banks. So the story was quite short. That basically, we decided to close the platform so as not to fight back with 7 banks, which basically means like 700 lawyers. But I mean, it's just to share with you some of our experience, and I mean, it's not always a success story. There's probably like for every one of us that are sitting here telling you a nice thing, there's probably like 9 there in their home just probably working on a second or third idea. But I think it's just a matter of trying to build something that people want and which is useful, and being consistent about it and working with the right people. That's part of my experience.
Now here is an interesting thing, right? Because like we said, like Latin America is like quite different. You put the point on like having a blueprint that people can follow, that can foster innovation, because in the end the lack of regulation can kill innovation, because you want to do A, you say yes, this was a great idea, fantastic, and suddenly you realize, no, we can't. There's a problem there. How can we, like, not only as an ecosystem, but also as a group of ecosystems, you mentioned the Mercosur, how can we work with governments across the regions to get to a point where it's actually as easy as just starting a project to build like fully fledged companies? And maybe some of you can like shed some light on your vast experience of how have you worked with these entities in the past, how they approach to you to say, hey, Federico House, what we should do in this case? Or is it more like they are just there waiting for it to happen?
I think the main thing is to be proactive. I mean, we have started Kleros in 2017, and since that moment we did lots of education activities. We talked to the regulators. I think a very important part of this is educating them because they don't know much about this technology. So you need to explain what you're doing, why it's better than what exists. And in my experience, regulators have never been like obstacle. And what they want to see is that they are not doing something like shady. If they're doing something in the gray area, but in good faith, in our experience, they have been always open, and we never had a problem. If you do your thing, and then you play it like okay, let's do this, let's grow, and then let them catch us when we are big, then that is why, when you can get into trouble, because they will not like that. But if you are proactive, collaborate with them, in my experience, has always been, they have always been welcoming and helpful.
Yeah, it's an interesting thing, right? Like good faith is a fundamental piece, and I think like all of you here, in a way, are all part of the payment experience, and payments are very different, especially to you guys that operate in like different countries. Like, how different are really things? Are things in Argentina completely different as in Brazil, or are we talking about something like there's a mapping, there's a function that will help us get there, or it's like starting all over again and all over again? You mentioned Bolivia as one example, but like Manteca is in like 10 countries. How's that Central America part, for example?
Yeah, I think particularly there's a lot of different culture, and in terms of culture, the way people thinking on the economic daily situation. Like here in Argentina, everybody is like, they receive their pesos from their salary at the end of the month, and they are just deciding where to buy US dollars. In Brazil, if you go to any shop in Brazil, they don't really know which is the market against which is the rate against the dollar. So the landscape, it's kind of different because the culture is different, or the way people think locally. In my experience, it's really fun to actually to try to understand the market and to see how you can actually leverage on your experience from Argentina, that there's a lot of volatility when those moments come in some of those markets. For example, next year we have elections in Brazil. It's going to be a volatile moment. We know what happens here every weekend when we have the election. So I think like taking your knowledge from your country, especially when you are in a volatile market or in an emerging market, and applying it to those countries which are a bit softer in terms of volatility, it's something that I personally use a lot, and it's been truly useful to live some situations which are not comfortable, such as 40% market drop from the elections in 2019. But I think everybody learned from that, and it's something that it will help you drive your decisions on a financial decision making on your daily basis for sure.
Crypto in a way, or Web3 in general, it's one of the places where I see more founders appear. Like every time I go to a conference, every time I'm speaking with someone, I'm founding this project, I'm founding this project, and you guys are, of course, have a lot of experience in that part. Like, what would be the like some recommendations that you can give to those like young people that are just starting, like trying to figure out how to get along in this like complicated world in a sense, because we all want to be a global payment network in 5 years, but you have to start somewhere. Like, what would be the like 2-3 things that when you're starting, you say like, take attention in these things, like that you can tell to the people. Maybe we can go pick your brains one another and see where we go from that.
Yeah, I think on my perspective, there are too many things for just being able to pick one. In my experience, one of the things that we really liked was the way we built the team, and then the grit, and the let's say the resilience of just being there, putting working hours after working hours without quitting, right? We've been building on stealth for 2 years without receiving $1 in revenue. Selling to huge companies that after 2 years we closed, but we were selling for 2 years without, well, in our case, the sales process is very long, but it doesn't matter. In our case, I really like the way we just stayed focused, building and working. And yeah, there are too many things just to pick one. But if you work, if you're there, if you keep doing your job consistently, but consistently, like I heard about a lot of young people saying, I'm working 20 hours a day. And I'm saying, well, if you're running like a very short sprint that could work, it will help you get that feature launched by Monday maybe, right? But if you're trying, or if you're thinking on a 10 years project or a 10 years perspective, then that doesn't work, right? Maybe it's instead of 20 years, 20 hours a day, maybe you should only work 10, 12, right, or something like that. But it should be something consistent, something that you can make consistently. Maybe for you is 8 hours, but if you are putting 8 hours a day because you're a father or you have other things, just be careful and put everything you have on those 8 hours, right? And keep it consistently, day after day, without quitting until you get it. Right? You have, I don't know if you are going to get it, but at least you have more chances, right? It's a way of getting more chances of getting to point B, right?
Yeah, luck is something you create, not something that happens. Like, Ramiro, what would you tell yourself like 10 years ago?
Yeah, I think I definitely agree with the insights that Joaquin shared. I think at some point, being able to work with the right people, and when I say the right people, in my case, when I speak with my founders, I always think that they are better than me. But I think it's very important for each of the individuals that are either co-founders or are working in a company to understand which is the right role that you should be taking in the company. In my case, it's finance. I have no idea about technology. I probably was not that fond of crypto. I was more on the bonds and like the usual financial assets. But I think definitely like being focused, as Joaquin mentioned, but then working with the right people and the right and people that you believe that they are better than yourself. I think that's important, because if you work with people who you at least believe that they're better than you, or they will provide additional value to the company, there's definitely a lot to win on that side. In terms of work, I mean, being a co-founder is probably something that it's really, really tough. I personally, I can remember, I think the last time I had holidays, it was like 6 years ago when I got married. But it's something that I don't regret. I work Saturday and Sundays, and the phone is always turned on. But it's part of what we do, and it's part of what we actually probably enjoy doing it 24/7. So that's a bit of my experience, and what I believe it's a good recommendation for future founders to consider.
Federico, what's your take on all of this? Probably resonates. It resonates with me, or probably it's going to resonate with you.
No,
as well.
I mean, I think that we just got two completely opposite, suggestions. One is don't work too much and work Sundays, and so I think the moral is, I mean, there are no easy answers. From what I learned, if I was starting now, I had to do something different. I think that we should have been more focused on what the customer wants. So because we were Ethereum and we were so focused on every part of the process needs to be decentralized, what if some attacker come and hacks this little part of the process in this super weird corner case? And we spent like weeks trying to solve that. it would never happen. I mean, never happened. But still, the customer would not know the difference, and we still spend a lot of human hours of thinking about that. I mean, this long answer is just to say, build something that people want and where they appreciate what the technology adds as value, and not use the technology just because it's cool, let's say.
No, 100%, and take care of them. In the end, they are the ones that are going to make or break your business. Maybe just to close out, because we are on the last minute, if you had a magic wand and you can change something that will make easier your business, what would that be? Open question, whoever wants to take that one.
What's the question again?
If you had one wish that would make your business a little bit better and simpler, what would that be?
I mean, for us, something, not now it's solved, but looking at the past, I had wished that the Ethereum has scaled faster. So it would have been cheaper to use in the beginning. But, well, now it's solved, so it's okay.
Yeah, probably on my side, I would say that sometimes we were too careful in terms of growing the team because we were afraid to spend part of that revenue that we were getting. And probably that would have been something that would have allowed us to probably scale the revenue even faster with the right people. So I think that's that's probably the thing that we kind of regret or we revise from the past, and we believe that it could have made us grow faster. So yeah, I think so.
Joaquin, last words to close out here?
Yeah, maybe a wish would be that traditional companies were more open to innovation and new projects, mostly in Argentina. So maybe that, but just as a closing. So.
Let's work together to get that then. Thank you very much, everybody, for coming here. It's been a pleasure.
Thank you very much.
Thank you very much, everybody. Well, we will, gracias. Well, we will have one last panel before the last break, where we are going to have some ice cream for those with a sweet tooth. So we're going to have Argentinian. Watch out. Hola, ahí está. We will need. No, we're okay with that or no? 6? Oh, it's going to be 6. A very big panel. Okay, we can start. We talked about government and regulator playbooks. Now we're going to talk about myth-busting blockchain for institutions. It's very interesting because I'm a lawyer. I studied finance, and the fact that I can participate in this ecosystem in a way, it makes me very happy, and understand that my skills today are useful is also very pleasing. So now we are already here. Do you want me to help? No. Vamos a hacer así. One more. Tuki. It's a crowded stage. Maybe I have to go down the stage. I don't know. Like The Office, like do a flip. Do you remember The Office? I'm gonna jump, do a flip. Well, I believe. Si estamos acá. Okay, there. This. Well, this is also design thinking. Well, we're going to present, first of all, John Cincinnati, the president of the Interchain Foundation, as the moderator. Please come in. They will give you a mic. Hi, Josh. Nice to meet you. Yeah. Thanks. Here you have your microphone.
Perfect.
Next, we will have Nicolás Pecherki, senior advisor, a friend of mine also, a public affairs and a member of the FinTech Chamber of Argentina.
Hey, thank you.
Nico? ¿Todo bien? We're going to ask Martín de Dios, Public Affairs of Globant, a very big international company. We have also Nick Mauro, Product Manager of Crypto and PayPal. Amazing. Please, Nick, have a seat. We're going to have also Lorena Moscovich, Head of Experimentation of UNDP. Welcome. And Redwan Maslam from Ethereum Enterprise Alliance. Thank you very much. I leave you my mic.
Okay. Great. Thank you. Thank you very much for the introduction. And thank you first off to all the panelists today. This is a great group of people for this topic. I'm excited to have all of you here. And I think the best way to start is actually to just jump in and tell everyone a bit about our own background, where we're coming at this industry, and like what our own maybe fundamental bias might be. And then what myth you would actually like to bust about enterprises and blockchain today. So in my case, my name's Josh Cincinnati, the president of the Interchain Foundation, which is sort of chairman of the board. Previously, I was the former founding executive director of the Zcash Foundation, and I really come at this from a cypherpunk angle, which is great, right? But it also then begs the question, why am I excited about enterprise adoption as a cypherpunk? But I think that part of that is an evolution of what I see is going from binary thinking, like there can only be, anonymous cypherpunk money, to there's actually a gradient in terms of adoption and how people approach these systems. And I'm very excited to explore that with all of you. So yeah, go for it. Yeah.
Well, it's a pleasure to meet you all. My name is Martín de Dios. I come from Globant. For those who don't know Globant, it's an international film with Argentine origins. And we started as a company developing software. And we are now a leading Latin American company implementing AI and obviously different types of technological solutions. We're typically branded as the brand behind the brands you know. I personally lead the public affairs department. So yes, this big question on the banking myths is one that I try to reply pretty often, speaking with different stakeholders within government, resisting a lot of changes, and sometimes being keen on changes that are not required. That's something that might happen. So I think it's a very interesting opportunity to have a fruitful discussion, and particularly have opinions from different angles from different countries around the world. I think there's a few countries that we can pick of great examples incorporating blockchain institutions. So it's great to start sharing experience and share the challenges that we have.
Yeah, Nicola.
Hey, first of all, I think I'm the only one here that never lived in an English-speaking country, so sorry for my idiom. I really hate the organizer for this, because he's been in UK. So I'm from Argentina. I worked like 18 years with different governments on a local government, provincial and then national level. I was the head of Internet public policy for the national government, in charge of the digital agenda. After that, I started working on the crypto ecosystem with different wallets and projects, and I worked 2 years in WorldCoin. That is maybe the most polemic project that LATAM had on the last year. So I know a thing or two about myth busting about blockchain. And now I'm an advisor from different companies, and I'm working with the FinTech Chamber.
Hey, thanks, Josh. So my name is Nick Morrow. I work at PayPal, product management there. Of course, anything I say, any views I express are my own and not PayPal's. But yeah, so I work on the crypto team, initially working solely on Pi USD and trying to grow its market cap and expand it in countries other than just the US. And so that's something that's in flight now. And part of my time is spent product discovery on thinking through whether or not PayPal should get in the blockchain infrastructure space. So if you've seen announcements by Stripe via Tempo and Arc via Circle, Google, and so on, and doing some analysis on to what extent it makes sense for PayPal to also operate its own chain. I spent some time at OKX prior to that, and I would say one of my biases, not quite cypherpunk, but I consider myself partially cypherpunk, but I've been interested in Ethereum in particular for a while, and so my bias is always not heading into product discovery initiatives like the one, or research spikes, kind of with an L2 already in mind, and trying to make sure I'm exploring all options and not letting my bias drive me too hard. And should I also explain one of the myths, or is that next round?
Yeah, we'll wait till next round. That's good.
Got you.
Thanks. Nick. Yeah, Lorena.
So first of all,
Yes.
thank you for having me today. This is my first time in a blockchain conference, so let's see how it works.
Yeah.
Welcome. There you go. Well, I work for United Nations, which is a big thing. United Nations, not the fact that I work there, but I'm a political scientist. I used to work as a researcher and professor, and I joined the UNDP, which is the United Nations Development Program Accelerator Lab in 2019. The Accelerator Lab is not an accelerator, which drives to different confusions, but it's a unit of research and development, and particularly innovation. And the UNDP works in more than 150 countries and supporting governments in development strategies. And in doing so, it gives technical advice and it fosters innovation. Of course, innovation is related with digitalization, of course, and the adoption of new technologies. And we think that blockchain is very much aligned to the core values of public sector, like efficiency, transparency, financial inclusion. So in this sense, the UNDP started a number of actions. It has a whole blockchain, let's say, division or something like this with so far 17 people. And we work on capacity building within UN, within the UNDP, and with government partners. We have an SDG ideation challenge in which we, in Discord, we have $1.5 million for real life blockchain initiatives, which is for you, it's not a lot of money, but trust me that for blockchain in the UN, in the UNDP, is a lot of money. And also we want to have like a coordination role, because, for instance, there are 11 identity initiatives based on blockchain across 8 different UN agencies. So we want to kind of help to organize the ecosystem. And we map blockchain solutions that can be used at government level, and also we map potential providers for the blockchain or the policies using blockchain within the governments as well.
Thanks. And Redwan.
Yeah, thank you very much for having me, Josh, in here. So Redwan, I'm the executive director of the Enterprise Ethereum Alliance. We are like the Ethereum trade organization to promote and support adoption of Ethereum to large enterprise. And to answer your question, I love that you mentioned Zcash. Before being at the EA, I was at ChainSafe, and we did some few. We actually, the team did the implementation of the first time you did some, I think, the library to do like some ZK proving in web using, I think, some WASM blob. It was a kind of very top, but I'm being a bit nerdy. But now that we established, I'm also understand the cyberpunk. I think to answer your question, the misconception is that we think it's an engineering problem. And we're not in an engineering phase anymore. I was this morning at an event that we did with EY, and on the closing remark, I said, any problem you have for institution or for a large enterprise, it's not going to be an engineering problem. It's going to be some change management. It's going to be some education. It's going to be understanding how you can be able to answer those compliance rules in a different context of technology. And so if you show like a compliance officer like Etherscan, you say, what the fuck is this? Everything is like, it's how we can translate that into a language that talks to people that we want to adopt the technology. And I think the Web3 industry as a whole, not just Ethereum, is a very engineering focus ecosystem. Zcash, one of the most innovative like on that side. And so we need to, I think we need to switch the language from very engineering to something more product, more problem that you solve, and removing some of the jargon that makes this like difficult for institution, I think.
And that's actually a great segue, I think, because it does make me think that one of the myths that I think is prolific is that people feel like the technology itself is not mature enough for enterprises to adopt. And that's seemingly not true. It's in your view, it's more that It's that this is a communication, education, and kind of people problem, right? And I know, Nick, I know you were chomping at the bit to talk about your myth, so if you want to jump on, either if it's incidental to that or something separate.
On that point specifically, I think there's levels to it. So obviously PayPal has PyUSD, and so they don't think that the stablecoin infrastructure is, they of course believe it's sufficiently mature to get into that business. But I do think there are open questions still when it comes to operating your own chain, for example, or tokenizing, and this is just a hypothetical, right? But tokenizing everyone's PayPal, Venmo, Zoom balances. More extreme moves like that. I still think there are a number of legitimate questions on whether or not the technology is mature enough. But we're getting more and more answers to those questions. Like there are projects that are offering selective privacy now, which cater specifically to some of the compliance and regulatory needs that companies like PayPal have. So I think within the Ethereum community in particular, there's a ton of progress being made, but I wouldn't quite say the technology is at the point yet where we can call it mature across the board.
Of course, absolutely. You know, we cannot put DTCC or Euroclear or maybe on mainnet with like the volume that they have today. But the roadmap, and we see, I think, and this also across the ecosystem, like it's gonna get there. You know, I was just in some event recently when a large company was announcing building a L2 that's gonna have some 100 TPS per second. So by the time, you know, like those contract and deployment is going to be, will it be there? I agree with you, you know, like it's not there yet, even though I think like Atlas, you know, like ZK, I think they released like 15 TPS, I think on their latest upgrade. There's still something to be done around privacy solution and it's still very complex, but yeah, I agree with you.
Yeah, that's right. And to switch gears a little bit even from the product side, well, sort of the product and getting internal enterprise adoption, one thing that I'm curious about, maybe more for Martin, Nicola, and Lorena here, is actually more on the regulatory differences that we're now seeing across the board. Because I think something that was a pleasant surprise for at least folks in the US was that, you know, the last couple of years have shifted to being a very tremendously friendly regulatory environment. And I think there is a sort of, at least my view, an American bias that, oh, that must be happening across the world. But as we were chatting earlier, that isn't necessarily the case in Argentina or other places in Latin America. And I would love to hear just more from y'all about whether there is this sort of regulatory lag in understanding in other parts of the world.
So let me talk about Argentina. That is a place that I know better about regulation. So we are on a path, I'm not the government, but the government is in a path of regulating crypto as a crypto financial asset, not as a blockchain technology. And that comes with several problems. One of them is that there isn't enough information or education about what blockchain is. I believe they don't understand the basic difference between a custodial and a non-custodial wallet. So that's a big issue in our regulation. And also, when you regulate, you start charging taxes. And that's a big issue because the business of a wallet in Argentina, but I believe that in every country in the world, is like this. The transaction fee you get from each transaction is really low. So in Argentina and in Latam in general, the business is in the spread. They are regulating that as well. So the spread is going to start paying taxes in Argentina. So the business is every day is going to be shorter, and it's going to be better for the big players and not for the startups. And the other thing is like myth busting. I wanted to say just one little story I had with high public officers from a province in Argentina. That is the focal problem with drug cartels in Argentina is that province, and they said before crypto, when we opened a drug cartel bunker, we find it cash. Now with crypto wallets, there is no cash. So they think that blockchain and crypto is promoting drugs. And what I say is, okay, but if you get the phone, you open the phone, you find the address, there is perfect traceability. Yeah, you can know every other thing that they did with that wallet. You can know everything with blockchain. They didn't know that basic information about blockchain. So we need to do a lot of education to the regulatory environment.
If I may ask some things, I don't want to completely derail from the question on the regulatory side, but keeping it in the myth-busting questions, I think that there's an issue that we see particularly in governments. In Globant, we work closely, not only incorporating blockchain solutions for enterprises, but particularly in governments. When I think of institutions, the first idea that came to my mind was particularly government, not just because I work with government. But there's a big area in which we must do this communication work that I think for which I think it's essential that we showcase what is the benefit for this institution or organization. Because typically when we think of blockchain solutions, and obviously we're speaking on a conference that is about sovereign, we see the benefits of in terms of cybersecurity, in terms of traceability. We see all these series of benefits, but sometimes we fail, I think, to communicate the benefits on a commercial side. And we tend to think like, well, this is why we should incorporate the technology, but then we should go into showcasing the specific ROI of implementing the technology. And that's where I think we do fail in terms of communication, right? I think there's a lot of doing this myth busting that comes from showcasing successful stories in terms of not only being more, in building a solution that is more trustworthy, but also a solution that is more commercially viable, right? And typically, I think this sparked into my head when you spoke about particularly the links with drug cartels, is that the idea of people is, well, blockchain is a good solution if you want to operate on an illegal market. You know, if you want to have, if you want to operate in the gray areas of law, but it's not a great solution if you want to operate on a commercially more viable solution, on a cheaper solution, and that I think is what we should work very well. It is finding those cases in which we know that this solution is not only better for being more trustworthy, but also it makes the solution cheaper. For example, particularly notaries. Notaries are extremely expensive. And a conversation we have all the time with government is like, why are you making me? I think maybe it's not the case in the US, I don't know very well, but I know very well the case from the UK, Spain, and Argentina. And we're currently developing working on a consortium which is called Alastria in Spain that probably you've heard of, developing an on-chain solution that is particularly thought of this idea, which is saving for private companies a hell of expenses in terms of notaries, for transactions that are could be much more cheaper and could be much more trustworthy with blockchain. I think the communication battle is critical, not only in taking it away from, okay, crypto brings drug cartels, but also crypto brings a commercial viable solution.
That's a great point. And just to go a little off my script, so apologize to the panelists in advance, but I mean, on that note, have the other panelists seen successes with a demonstration of commercial value to people that they've worked with on the enterprise space? And like, does it look like what you think? You know, obviously I come from the Cosmos bias, so to me, oh yeah, of course, like everyone wants to run their own chain. I know that's not universally true, but instead, a lot of the time, people just want to interact with pre-existing public stablecoin offerings, but there might be some hybrid approaches. And anyway, I'd be curious to hear if folks have seen those success stories. I think that's a great point.
Sorry, may I jump in relation with Martin's? I think we live in a federal country with 20-something provinces and more than 2,000 local governments. There is a huge, I mean, the landscape is very, very, very heterogeneous. I mean, and most of public officials can be classified in three categories: those who don't know anything about blockchain, those who have heard about blockchain but they don't know how it works, and the minority who at some point they heard about blockchain, they think it equals crypto. So public administration in Argentina has more than 2,000 different software. We don't operate with each other. So, and in most public offices, you can see they are using the free version of Google something. And at some point, you know, the system's bugs because many people is trying to are trying to enter the Google sheet, and at some point they lose their access. And and I'm talking about like the largest minister of the largest province. So I think that, of course, we have to show them the commercial value, but we are a bit behind, sorry. And I think good examples in relation to crypto adoption by government is, of course, Buenos Aires City, which not only gets crypto to pay taxes, but also Buenos Aires City updated the register of commercial activities and economic activities, so people can work mining or investing in crypto without being classified in a wrong activity, and also without being punished for something legal. So we have like a long road to walk.
As you said, how we make money. That's the big question. At the
Sure.
end. How we, not just how we save money, but how we make money. And I don't think anyone has really cracked that so far. And that's really how it's summarized, like the last year of conversation I had with different institutions in different setups. Like, okay, we get it. We know what you can do, but how this is gonna business, you know? You're a PSP provider, you do like 100 billion a month in FX transfer in, you know, X countries. Cool, I know what I can do with, you know, stablecoin. I can, you know, don't have to pre-fund like, you know, Nostro, Vostro, and have some capital efficiency, but how am I gonna make money out of this, you know? How, like, it's very different from like the business model that I have. And that's sometimes like I think the challenge, but I think it's gonna come together, you know, like JP Morgan did that first, like, you know, I think bank deposit on base last week. They have some other banks that are gonna join, so those are gonna start like, as people, they use more and more, I think, the technology, and the more there is some deployments, I really see that as you get closer to a little like crazy village, you know, and the crazy village being the Web3 in general, and like you get closer and you say, oh, well, you know, it's not that scary, and there is something we can do, and as we progress, I think we're gonna have like more, you know, value and emergence of business model that's gonna be created. But I agree with you right now, like it's the $1 billion or $1 trillion question, you know.
Yeah, that's fair. And I think the other question that comes to mind when I think about, you know, demonstrating all of these things as being compliant solutions, that they'll work within the existing regulatory frameworks or new regulatory frameworks that are coming online, you know, there's this expectation that you will be able to see the full history of someone's activity in a public blockchain wallet, which, granted, I think is a great point that you made that should make regulators more comfortable. But then me, as an individual, terrifies me a bit, because I obviously come from a background where I believe very strongly in privacy as a fundamental human right, or degree of it. And I'm wondering, you know, especially in the panelist view, because you have, you know, way more experience, I think, dealing with people on the ground on this, like, you know, how do you balance those needs where you can demonstrate an advantage that is this auditability and provenance, but there's also these other technologies that exist that I, frankly, from the cypherpunk side of me, want to exist, that actually might make regulators a little bit more wary, right? In terms of shielding deposits and shielding and keeping private financial history, which, again, from an individual basis, I don't want the drug cartels to be able to do it, but I do want to be able to do it for me personally. And you know, how do you square that circle?
How do you explain ZK to a government official like that use
Big Where's Waldo
some
book,
free
you know?
free version of Google Sheets? Yes, I think actually ZK. You have a pretty good video that I sent to people to explain. Yeah,
me personally,
not you, but you're. I think it's you're like the founder of Zcash. You know.
No. Probably Zuko.
Zuko, yeah. On stage, you know, with those some balls. It's a pretty good video.
Yeah.
If I may add on that note, yeah, I think what basically this story you've been telling, it's very well ingrained with particularly the Argentinian people. If we see particularly crypto adoption, Argentina ranks among top countries, and it does have to do with the story of Argentina. I don't know, for probably you know coming from abroad that Argentina in the year 2001, the government seized deposits from the people. I have a memory from being 8 years old, being in my birthday, and my father just like running to the bank and coming back fully loaded with all his lifetime savings. Because the next day, they cease deposits, no one could take out their money anymore, right? So I think that there's this idea about like debunking myths in the use of blockchain, in crypto. In Argentina, we have, I think, a great belief in these types of solutions and a great level of adoption, which is not only from the use of for illicit purpose, but also from the fair use of people that have lost their confidence on their traditional institutions, in which ties very well with cypherpunks ideas. And I think that's why Argentina is so receptive and so confident on these institutions. What I think is yet the challenge, it's making government, and particularly governments around the world, bring these solutions. And lead the way in these solutions. Because I think we can see, tying back to successful stories in the private sector, or what you just mentioned from JP Morgan. But I think ultimately, if the financial institutions are still run by governments and are led by central banks, we should find a way in which these institutions can incorporate this technology with the idea of giving back to people the belief in the institutions that they require, right? And that's where I think the technology brings the solution. And I think part of the myth-busting free, I think we've talked first, just to tie back, we talked first about, well, the technology is here. Second, we talked about it's not just for illegal use. We said that we need to communicate the good cases, and I think the 4 points would be exactly this one, right? We need the government to lead the way, to make it in the interest of what this technology was specifically created for, that is bringing back the belief to people. And countries in Argentina where public institutions don't have much belief, and it's probably the same for Latin America, can leverage the use of technology to become more credible.
And do you think, and for all the panelists, do you think that we are operating with the right momentum to meet those 4 points? Because one of the other things that I mentioned in the pre-brief with y'all is this idea that we have been rocked seemingly every couple of years. There is some terrible crypto scandal, and it undermines everything, that all the progress that gets made. And we do bounce back, right? And yes, here in Argentina even, right? And I mean, but you see it even, I think mostly for me, it's the post-FTX world. Like, it's amazing to me, frankly, that we are where we are after what happened with FTX, and I'm grateful for it, but we don't know what's lurking in the future that might take us back. And I'm just wondering if the panelists feel like, how did we recover from that to begin with? And is there enough momentum that whenever inevitably that scandal will rise, because it's frankly kind of imminent in the technology, when you have permissionless technology where people can play these games with various financial constructions online, that there's going to be another scandal. So like, where, are we going to be able to
fat finger again? Do you think something like that, or even like another hack?
Well, I just think, it's somewhat inevitable.
No, that's true.
And it's happened time and time again. And so I think it's better to accept that it will happen and sort of, what are we going to do to overcome it next time, maybe. But Nick, did you want to?
I think I guess the fear that I have as somebody who shares a lot of your views, Josh, is that we're seeing the rise of permissioned chains that, from a UX perspective, offer many of the same benefits, especially to consumers who are not as tech savvy, and also to some certain institutions. And so I think the fear that I have is, like, if there were to be another one of these events, right? Let's say in a couple of years from now, for the first time, there are going to be very legitimate alternatives to permissionless chains like Ethereum, whether it be Tempo or Arc or any other proof of authority chain. So that is definitely a fear, and I think ultimately, I think in the U.S. I feel very bullish because of the history of the country and it being very focused on financial freedom and individualism. Globally, I'm not sure, but yeah, I think there is a real fear there now that companies are figuring out how to build blockchains that have, borderless financial services, but in a permissioned setup. So I guess we'll see.
Are you saying it's a technical like technical thing or like a human? Because FTX was not a technical glitch.
Oh, sure,
it was
sure.
a human, you know.
No,
so
no.
it's on a human layer. It's not like the tech in itself.
Yeah, no, I hear that, and but I do think that ultimately, you know, I think the ultimate coordination layer, you know, you feel like you solve the Byzantine generals problem in some of these cases, but they're the generals behind the generals, you know? It's the people that actually build this technology, the people that run these services, and that is, you know, there's sort of fundamental, particularly in these things that are so cyclical, where you have people that get, you know, excessively, you know, optimistic, and, you know, in FTX's case, it was really that they thought that they could manage their customer deposits better than the customers could, which was not a great trade-off for them. But yeah, I mean, I guess I do see it as more of a human problem. I don't mean it on a technical level. I think but that can then influence policymakers, regulatory bodies, governments in their view of the technological maturity and the possibility of adoption as well. So it's you know, that's at least I don't mean to be a pessimist about it, but I just want to be a realist, you know?
That's honest.
Yeah.
I don't mean to pile on the bearishness, but I think the technical risk still does exist, right? Like there's smart contract risk, and as these systems continue to scale, I mean, we've been very fortunate, I think, in the Ethereum ecosystem on balance, but I don't think you can ever close that door entirely. And
Yeah, agreed. So I am cognizant of time, and I know I had so many more questions. I wish I could have this panel for another 45 minutes. But so instead, what I would like to just fast forward to the end and just go in the opposite way, starting with you, Red One. Like, where do you see, assuming that the momentum continues, we surmount these problems in like 5 to 10 years, where do you see enterprise adoption for these technologies?
New payment corridor, like having money being spent immediately. The relationship with money, like the capital is going to be working like instantly. I think that's what's going to happen. And of course, the agent, you know, all the AI and payment that's going to be talked to each other. I think this is going to be pretty big. We've seen already a few of those, but I'd say, you know, you everything that you do action is going to pay directly. Your cash is going to work for you. You're going to have like a different relationship with your bank account. And that's, I think, where it's going to be very, very, like, you know, I don't know if it's going to be custody or self-custody or not, but for sure we'll have like a wallet address instead of a bank account.
Cool. Lorena? Just like...
Repeat the question, please.
Yeah, sure. Just where you see things 10 years from now, and in your view,
perfect.
more
Yes,
on the regulatory side, you know, like where do you see adoption even from the UN program?
I think in the short term, I mean, in relation to adoption by governments, I think in the near future, I don't see any changes in the near future. I see a possibility in 5 years at least, unless something very, I don't know, unexpected hits like the pandemic. But as long as crypto and blockchain is becoming more legitimate, the US, the EU, the UK, Hong Kong, Brazil also, they have new regulatory frameworks, also the development of stable coins attached to a given currency, I think give more trust to make feel the users more like, may feel the, yes, the people more make them trust more in the,
trust more in the technology and in the adoption.
Yes, in different kind of cryptos. I think little by little, governments are going to be more keen on adopting blockchain. And of course, the fact that organizations like the UN are also fostering this agenda will make governments more keen on adopting this. And there are some circumstances like, for instance, emergencies, or there are developments in relation to digital identity in the context of displacement. So I think maybe if we circle crypto in the sense of using blockchain for different aims, and so in a way to overcome the myth in relation with the use of this technology will be will help people to be more keen on using crypto as well.
Cool. Thanks. Yeah. Nick?
Yeah, just quickly, I'd say there's a lot of things I'm bullish on, starting with things like real world tokenization, real world assets, some of the stuff that Robinhood is moving on. I think specifically within payments, for thinking 5, 10 years out, my personal view is that the traditional payment rails will be upended, where you have like issuing and acquiring banks and payment networks and payment processors. I think it'll more look like there's a crypto network, and then there's something like a payment processor that is doing the coordination, but it's just a much more efficient market, and users are only having to pay, say, one entity, and then the validators or whoever's performing the consensus.
Thanks.
I think there is a big opportunity on data privacy with zero knowledge proof solutions. And I really think that now there is no demand of the population of taking care of their own private data, but when it starts, I'm sorry, that's making me nervous.
Keep going, it's cool.
When general population starts demanding data privacy, they are going to find that this is a really useful solution.
Great, yeah. And Martin, real quick.
Yeah, I'll just in extra time. So I don't know what's the future gonna look like. I'll just respond what I would like to see. I think that particularly for payments, we are seeing blockchain institutions bringing a lot of solutions, particularly with foreign exchanges. They're making a great case of success. I think another area would be the case of notaries, those type of services will really bring a great solution. And then particularly investments. I think tokenization of investments are a great way in which we can help people with just small savings have a good diversification of their income stream. And well, we're working on solutions like this on our company, but I think we have a lot to do in this area of debunking myths, because I think what I would like to see as a third place is public sectors, and particularly public institutions, leading the way and showcasing, not just like coming with regulations way after the market has developed, but also leading the way and incorporating this as a solution to bring back legitimacy to them and to bring back and to comply with the goals that citizens have. I'm also a tech optimist. So I can only respond on a more bearish note. I won't reply on what I actually think that will happen, and I thank conversations like this one, because I think it's key and it's very useful to exchange between different angles and particularly different experience, because these success stories will be the thing that will make it happen, I think.
Yeah, absolutely. Yeah, and again, sorry, I wish we had more time because this was great, and I just want to thank all of you for being here and for sharing your thoughts. And yeah, look forward to seeing how the next 5 to 10 years of enterprise and blockchain develop. So thanks y'all. Appreciate it.
Well, thank you very much for this huge panel. I don't fit in the stage in this time. I invite you, everybody, to have a quick break of 20 minutes. There's Argentinian ice cream outside. There's sun. There's something to drink. So we will come back to 2 more panels and give the ending of this day. Thank you very much.
where purpose meets a plan.
Ooh. Well, I hope you have a nice coffee. In 5 minutes, we're going to start with the last block of the day with 3 keynotes and 1 fireside. So I invite you to go back to the main stage. Well, guys, we're going to start, so please come to the stage. Well, thank you very much for being here for this last block. We've been going through lots of relevant issues and topics about blockchain, institutions, from the perspective of institutions, from the perspective of on-chain, from the perspective, that word is kind of from the perspective of banks. Now we're going to listen to a keynote talking about the future of tokenization and real-world assets by Marcus Was. He's core engineer lead in Injective Labs. So Injective's product, the topic will be that Injective's product suite and institutional adoption in global commodities markets. Marcus, please. An applause for Marcus, please. There you go.
All right, thank you. Yes, so welcome to the future of tokenizations and real-world assets. Yeah, like I said, my name is Marcus Watts, core engineer lead at Injective Labs, which is the main contributor to the Injective blockchain. Well, the first time working. Oh. Oh, here we go, okay. Yeah, so I'll give you a quick overview for those who don't know Injective, and then go more specifically into the tokenization part. So if you don't know Injective and you only want to take away one thing from this talk, just let it be this sentence. Injective is the first and only blockchain built only and specifically for finance. And yeah, we have been long in the space with 57 million raised by a lot of big players. And since 7 years of building, no security breaches, chain halts, as well as over 1 billion transactions and a fully circulating supply. And what makes Injective Injective? It's 3 pillars. It is very fast with 25,000 transactions per second, sub-second instant finality, very liquid markets with a lot of professional market makers in the space. So far over 50 billion of trading volume, as well as financial primitives that are directly built into the chain. So those include things like exchange with a fully on-chain order book, yeah, as well as many more that I won't be able to go into. But of course, one of them is the tokenization. So that's what we're focused on this one. And why tokenization? Well, it's a really fast-growing space. Maybe you've noticed this. Like here on this event, even yesterday at DevConnect, was one of the big talking points. And why? Well, it's a 30 trillion market opportunity, and it might be one of the first real use cases, product market fits. And yeah, there is real global demand for this. And yeah, now to what do we offer at Injective for like tokenization, specifically for institutions? On the one hand, we have a real-world asset module, which allows you to easily tokenize as well as manage assets with a variety and extensive customization options. We have our own permissioned token standard, which has obviously like blacklist, whitelist features, as well as other regulatory parameters you can choose yourself. All along with dual liquidity support, which has permissioned and private liquidity networks at the same time, and immediate utility through permissioned interactions on external and proprietary platforms. All along, it comes with like inherently built into our tokenization is interoperability, which leverages modules like the native modules on the chain, like exchange module, which gives you shared liquidity for your tokens, as well as a variety of different chains, like over 100 chains that we're connected to through different bridging technologies. And lastly, also advanced privacy options that I'll go more into later. Look, at a glance, I'll go through each step here, but we have a tokenization suite, then an institutional liquidity network, and that gives you 2 ways to access to the rest of the ecosystem. First, the native tokenization suite. So here, Injective has directly integrated with providers like Fireblocks and BitGo, and yeah, this helps institutions immensely. And then on second point, we have the real-world asset module that's directly on the chain and has blacklists, whitelists, regulatory parameters you can customize yourself. And then there's the institutional liquidity network, which is powered by professional, trusted financial firms. Some of them you can see at the bottom here, that are supplying liquidity for high volume, complex trades. And liquidity support basically gives you liquidity support for newly issued real-world assets on Injective, directly embedded into the core infrastructure with the novel order book, and of course KYC, AML, compliance, and permissioning all occurs at the asset level itself. Now I mentioned the advanced privacy features. So there's two ways you can go about this as an institution. You can either do like a more roll-up approach where you aggregate your transactions off-chain and then have a roll-up system to bring them back to main chain with an injective support for Ethereum, Solana, and IBC-based environments. Or if you need even more privacy, you have private subchains you can run that are completely independent, fully permissioned, and then you might have like a way to connect to the main chain only when it's needed for interoperability. And that gives institution privacy, scalability, and access to Injective's financials infrastructure. Some other unique features from our tokenization is we have a compliance microservice. So that's a tool that helps you to basically define the token rules that you need for compliance, and also has a lot of automation built into it. For example, you can integrate it with Ethereum whitelist blacklists, and then you don't have to do anything. It's automatically synchronized across and brought over these rules to Injective. In general, Injective is actually fully Ethereum compatible. So all our addresses are actually just Ethereum addresses and can easily be converted from Injective to Ethereum address. And now we also launched EVM recently. Like I said, we do have connections to all kinds of chains through a variety of different bridging technologies. And all in all, basically, Injective gives you like this all-in-one token solution, which, and the Injective team is also there to basically guide you as an institution from beginning to end. So it's always like a very hands-on experience if you come to Injective as an institution. And so far, Ethereum has by far the most real-world assets, but Injective is one of the bigger alternatives with 34 million of real-world assets right now, consisting of US treasuries, equities, commodities, forex, and international funds. I won't be able to go through all the latest activities, but just mentioning one, we just had an ETF launch, and most recently we had the EVM launch. So, which is not directly the Cosmos EVM, but our own implementation, which is using the latest Geth with direct chain and exchange integration, so you can interact with all functionality through Solidity, with our own custom multi-VM token standard, which basically combines the native tokens with ERC20, with direct support for Hardhat, Foundry, and also a unified token standard for the WASM virtual machine and the EVM, and a shared liquidity layer for EVM dApps. And our ecosystem, even though we just started it essentially, is already it's growing really fast. A lot of projects that have deployed or are currently in the process of deploying. All right, thank you.
Thank you very much, Marcus. Pleasure. For sure, I will need to study a bit more about Injective. Well, the next keynote in the second or the third in a row, it's going to talk about Japan. It's a country very far away from here, but it's Japan Move on Chain. The speaker will be Andy Hung, Head of Alliance and Pacific Meta. Andy, nice to meet you. He's going to talk about Japan's regulatory model and its impact on early adoption. A big applause for him, please.
Hi, good afternoon, everyone. Is everyone having a good day?
Yes.
Okay. Thank you, thank you. I get a bit nervous, so I want to make sure that I have everyone with me. So my name is Andy. I came from Pacific Meta, and I'm going to talk about Japan's move on chain today. Before, I should probably stand on this side. Before I start talking about the main topic, let me do a quick introduction of our company, Pacific Meta, and myself. So Pacific Meta, our mission is to create the Web3 standard from Japan. And we've been helping corporates, enterprises on the global front and also on the Japanese front. These are some of the clients that we have worked with and many more that we cannot put in here. So what we do, of course, we help like enterprises and institutions for their on-chain strategy, but we also help projects in the blockchain space for their go-to-market from strategy to execution and beyond. And myself, I am the head of Alliance in Pacific Meta, and I've been helping global blockchain projects on their brand strategy for their go-to-market into the Japanese market. And so here we go. The main topic of today is about the Japanese market and why is the Japanese market significant? I think that's probably a question that most of you have while listening to this keynote. So I'm going to go from Japanese financial market at first. There's a lot of stats here. For example, Japan is the second in net outflow of foreign direct investments. In the bottom, it's probably not visible here. Japan has one of the biggest funds, which is the Japan Government Pension Investment Fund, just right after Swiss. It's the second biggest in the world. And on the right, there's a graph of the turnover ratio of global markets. And while Japan is not the top, you'll see that it's on the top 6 after like China, Turkey, Korea, and like more developing markets. And so Japan, being a very big country, I mean, everything's just gonna go on its own, no? But if you look at it, Japan actually really needs alternative investments. And why so? On the left, you see this graph, which is a comparison with Dow Jones Index and Nikkei 225. Ever since the 90s, DJI has been taking off for its growth. But Japan, it's been going pretty slow. And some people describe it as the lost decades, the lost 30 years of the Japanese economy. And during that period, in the early 2000s, there was an incident called Mrs. Watanabe's trading, which are basically a bunch of retail investors who are mainly like housewives trading Forex and pushing the market. So you see there's the appetite for alternative investments in Japan. And so we're in Sovereign Day. We're talking about blockchain. Why is Japan significant in the blockchain space? You will see, of course, like the US has been doing a lot, like Genius Act, Clarity Act. But Japan has also been pretty aggressive. Its government has decided that blockchain will be one of the main things for their, for the national policy. And there's been like papers written, like white paper, the Web3 white paper 2024, and even before that, there's talks about using Web 3.0 for Society 5.0. And here's more about it. We've talked about like the framework, but has anyone been to Expo 2025? Maybe, okay, someone from Japan. And if you didn't know, the Expo 2025 wallet is actually has a blockchain background on it. And there's also been other applications or other studies on IP tokenization, on regional revitalization, which is something pretty much only happening in Japan, but it's a way that the Japanese government want to push forward using blockchain technology. And about like blockchain related stats about the retail side, you see just based on statistics that are related to the centralized exchange is in Japan, according to the JVCEA, more than 10% of the Japanese population has a central exchange account. And that population number includes like children and older people. So you will see that there's probably more if you just compare the working population. And there's been growth, constant growth from in the number of accounts created and also the user deposit balance. In terms of the crypto asset accounts, you get, we have a 78% compound annual growth rate since 2018, and also a 52-fold of total user deposit since 2018 on the central exchanges. And I'm going to talk about more about the characteristics of Japan and how it became to where it is right now. The first thing, has everyone heard of the Mt. Gox incident? I guess those of you who've been here for long enough, the Mt. Gox incident that happened in 2014, shocking a lot of investors, actually pushed the Japanese government to do stuff, mostly through the Payment Service Act and through the Financial Service Agency, the FSA. And after that, there's been some other incidents as well on the centralized exchanges in Japan and other places. And so, fast forward to 2022, you know, does anyone know about the FTX thing? Yeah, okay, I feel like more people know about that. A lot of people lost their assets during that crash. There was also Terra Luna. But in Japan, because the government has been setting up these regulations since 2014, most of the retail users, the retail investors in Japan actually avoided that crash. And even from there, we've been continuing to build our regulation, continue to build our legal, safe net for the retail users. And you can see the FSA has been doing stuff ever since, and the latest working group meeting that they had in 2 weeks ago, they set up more on the regulatory framework, information disclosure, so on and so forth, like trying to make sure that everything that happens on chain, all the trading, the retail investors are protected. And wanted to say something more fun. Instead of just like regulations, we've seen good news in the Japanese market with the first fully regulated yen-backed stablecoin being approved and released in October, which is a month before now. And with that, of course, the stablecoin itself is out. There's also lending markets and also like vaults that are here. And I guess like in the next keynote, you'll hear more about what IBC is involved in that. And okay. And about the institutional movements, maybe some of you who are from the US will know that JP Morgan has been developing since like 2019. And Japan actually probably started earlier officially from 2016. And there's been involvement from mega banks. They have been joining the Project Agora, the mega banks, MUFG, SMBC, Mizuho, and Monex Group. Also, of course, the Bank of Japan that has been joining and helping create the Project Agora. And we've seen more movements in the FinTech Hub, which is established by the Japanese FSA. And they've been doing a lot of studies on regulated DeFi, joint stablecoin issuance across all the mega banks in a single, in a trust type stablecoin. And I have more examples of what enterprises have been doing in Japan other than financial institutions. But because of the time limit, I'm going to just skip. And if you have any questions, if you're curious about this, please feel free to come and let's discuss and I can share more. So it's manufacturing, it was telecom earlier, and entertainment industry, also like corporates trying to build their own chains. And going forward, I would say Japan is emerging as a compliance-first ecosystem for Web3 ventures. And why am I saying that? First of all, we had a piece of news 2 days ago where the Japan government is moving to apply disclosure requirements and insider trading regulations to all the crypto asset tokens that are handled by decentralized exchanges in Japan. That, although that might sound a bit gloomy, on the other hand, we have expecting that the Financial Instruments and Exchange Act to be passed in 2026. And what that means is that we will be getting these three things. The first, individual tax cuts from up to 55% to 20%. Corporate tax relief, so that you can like corporates can be exempted from their unrealized long-term gains. And asset reclassification from means of payment to financial product, meaning that we might be getting a crypto ETF in Japan soon. And we've seen how Forex grow crazy after the reclassification of the asset and the tax system. And we're hoping that this also happens to crypto after the passing of the FIFA. Then these are like my conclusion of the Japanese market. This strategic playbook part might be most relevant for those of you who are developing. I think it would be important that you focus on building something that's craftsman, something that's perfect and easy to use. Focus on boring pumping if you're just starting, and fix your narrative to make sure that it fits the market. To conclude, like Japan won't win Web3 by being wild or fast. It will win by being one of the safe place where it is adopted by the mass. And I hope that also affects the whole global ecosystem, with Japan bringing the guardrails, the standards, the legitimacy, the cultural depth, the institutional trust, but the most important thing to be the role model in how regulated, how compliant DeFi can actually be done. Okay, I thought I have another slide. Oh, thank you.
Thank you very much.
And if you want to chat, I'm around. Would love to talk to all of you.
Thank you very much, Andy. Opa, almost full. Thank you very much.
Thank you.
Well, we're going to continue with the next keynote. That's also about Japan. So we're being Motoki Yoshida is the head of marketing of Toki, and he's going to talk about Japan IBC adoption and IBC-driven banking pilots across Japan and improvements over the SWIFT-like rails.
Okay.
Welcome, Motoki. Please.
Thank you. Great. So hello, everyone. Can you hear me? Okay. So yeah, thank you. Hello, everyone. My name is Moto, and I'm the head of marketing at Toki. Actually, the previous speaker, Andy, is one of our friends in Japan, and we are co-hosting the stablecoin summit in Japan. Yeah, this is just a side note. Okay. So yeah, I just arrived here in Buenos Aires yesterday, all the way from Japan, and it took over 24 hours. But yeah, I'm super excited to share our perspective that is largely emerging from Japan, that IBC is becoming the essential infrastructure for financial institutions, right? It's not like nice to have, but it's not like experimental, it's essential, all right? So let's get started. So yeah, a little bit about ourselves. So Toki, we started blockchain already in 2018 under the company named DataChain. And we have been contributing to IBC since 2020, since even before the first IBC connection was made, right? And some of you may know our work on IBC Solidity, maybe. IBC Solidity is a IBC implementation in Solidity language to expand IBC ecosystems into AVM ecosystems, right? And we have a mission to provide a sovereign cross-chain infrastructure within the IBC, right? And uniquely, we have a strong and deep relationships with financial institutions in Japan. And that gives us a front row seat to understand their requirements and their concerns and why they view cross-chain technology as a structural necessity. So I will share that with you today. Yeah. So let me share some real use cases in Japan. So now the Japanese financial institutions have worked on some real-world blockchain applications, and naturally they are being built on different blockchains. So that's because of that, it's clear that they need the cross-chain solutions. Cross-chain is not optional, but it's the backbone of their core infrastructure, right? And so let me explain some examples. The first one is Project Pax. It is basically a cross-border stablecoin payments project, and it is like a bank-to-bank transfer using SWIFT API and IBC, right? So this is actually the first stablecoin project for SWIFT. This is exciting, right? And the next one is Project Trinity. It is a project to enable DVP settlement between security tokens and stablecoins. And this is enabled by the cross-chain atomic swaps via IBC. Importantly, this project is led by SMBC, the second largest bank in Japan. Yeah, this is great. And also, the last one, stablecoin. So as you may know, in Japan, there are a lot of stablecoin players emerging. with a strict or compliant regulatory framework, right? And one of the notable example is that the joint venture called Progma that is backed by multiple Japanese financial institutions such as MUFG, the largest bank in Japan, and SMBC, the second largest bank in Japan, right? And they are providing a stablecoin issuance platform called, yeah, and IBC is the core infrastructure of the platform. And it's like a CCTP for USDC, right? So, but it's more secure way because it's built on IBC, yeah. So yeah, when we speak with financial institutions, their requirements for cross-chain infrastructure falls into 3 categories consistently. So one is sovereignty, and the second one is security and global scale. It's obvious, right? So they require a cross-chain solution with no vendor lock-in, and the one that has that they have full control over system operators to meet their compliance, privacy, and there are other requirements. That's obvious for financial institutions, right? But actually, yeah, a lot of today's cross-chain solutions fail to meet these requirements, right? And financial institutions always said there are 2 core problems. The first one is the inefficient security via validators. So if they use the cross-chain solutions with multiple validators, then they have to spend a lot of dollars to incentivize those validators, right? And if they try to reduce that cost and try to reduce the validator to reduce the cost, they have to, it will like directly compromise security, right? That's one of the problems, yeah. And second problem is the vendor-led protocols, right? So most protocols are lacking of clear standards for customization of fork or contributions, yeah. And those cross-chain protocols are tied to revenue models or token price. So yeah, that's why they have strong incentives, like to prioritize like some connection or new features that maximize their profits, not the financial institutions' profits, right? These are the huge problems, and as a result, the sovereignty is never genuinely guaranteed. This is a big problem, right? So yeah, that's why in Japan, IBC is valued or seen as a best use case or best solution because they meet all the requirements, right? So for example, for sovereignty, IBC has no token or business model, and they are fully open, and they are free to use, fork, and contribute to, right? And they are self-hostable with no third-party dependencies, right? And for security, it's famous for the highest security through the light client verification, right? And also, light client verification tend to be costly, but at Toki we are developing a middleware called LCP, right? And that will enable like cost efficiency light client verification using TEE and ZKP without compromising security, right? It's hard to explain within a minute, but yeah, LCP is a good solution. Okay, and global scale, it's obvious, right? So yeah, in Japan, IBC is like seen as the kind of like internet layer, like TCP/IP. It's not something to buy. It's something to build upon, right? Yeah. So yeah, let me share some updates about our solutions. So as I said before, we are providing the cross-chain infrastructure, and on top of that, we are providing the transfer app using the core infrastructure as well, right? And this transfer app has been stable since its launch in February 2025. And actually, you've seen 20 million transfers within a week. It is equivalent to the IBC transfer volume of Cosmos Hub at a time. It's huge, right? And we are now supporting the Ethereum BNB chain and Optimism mainnet, right? And Unichain support is very, very coming soon. Also, the support for our base chain and the Polygon Avalanche are following very soon, right? And one of the exciting things is that Toki's ICO is coming as well, right? Whew, right? Thank you. And yeah, we'll share more detail shortly, but our goal is clear: to accelerate the adoption of sovereign cross-chain infrastructure at a global scale. This is our vision. And if you are interested in this vision or our projects, yeah, please follow us on X or join our Discord and stay tuned, right? And oh, maybe this is the last slide. Okay, great. So yeah, I have just one message that I want to tell you here. So yeah, sovereignty is not a luxury, but it's a foundation of like global on-chain finance, right? And IBC is the only protocol that enables sovereignty or security and scale all at once, right? And Japanese financial institutions already understand this and hope the rest of the world is now beginning to see that too, right? And yeah, so yeah, we're excited to like expand sovereign connections together with anyone with the same vision. So yeah, I hope you will talk after this event later. Yeah, thank you very much.
Thank you very much. Thank you very much. Nice to meet you. Well, we had, as an Argentinians, while they are putting up the chairs, as an Argentinians, we had a very bad experience in Korea-Japan's World Cup in 2002. We lost in the group phase. So we are very glad to having you here and joining to us with this kind of information. Now we're going to have our last fireside before the keynote to close the conference. Today, in this last fireside, we're going to talk about privacy and confidentiality. That's the key to unlock for finance on-chain. This will be moderated by Ana Ojeda, head of BD Num Capital and Legal Rocks founder. And as speakers, we're going to have Alan Scott, co-founder of Railgun, and Roman, protocol engineer of Osmosis. Are you here? Yeah, please, come in. Go on. Hello, Roman. Thank you. Nice doing. Yes, let me unleash this. Let me bring you some mics. And where's that? Thank you. Sorry? You want me to moderate this? Okay. Improvisation is kind of my thing also. Well, nice meeting you here. Welcome to Argentina. We're going to talk about privacy and confidentiality. What's the priority? Why privacy is a priority in nowadays intersection between blockchain and institutions?
This is a great question, but Anna, you don't really look much like your profile picture.
No. I have fluid gender. You should put the microphone.
Oh, is it? Can you hear me now? Are we good? All right. So yeah, the reason why I think a lot of people sort of had a misunderstanding on blockchain originally. At the end of the day, if you ask me why blockchain, it's about immutable finality of transactions and the verifiable finality of transactions, and it didn't really have a really clever way to do peer-to-peer blinding. And this actually creates a lot of challenges in the financial sector for competitive spaces, trading, confidential financial information like people's salaries. And so now that like blockchain is sort of getting more general adoption, we're starting to see a lot more desire for it because it's just a very boring necessity and sort of an underappreciated part of finance.
Roman?
Yeah, maybe to add to this with an example, like imagine that you are a hedge fund operating on-chain, and as you...
to put your microphone near.
Yeah, and as you have all of those upfront fixed costs to develop the strategies on the research and development, in the current world with the public blockchains, as you leverage all of that upfront investment, you immediately leak all of the competitive advantage that other entities and hedge funds may utilize eliminating any edge that you have.
Yeah, exactly right. It's really hard to charge your clients 2 and 20 if they can just copy trade you on everything. So it's a very good point.
Yeah, there's a thing about blockchain that finance is the transparency of finance in blockchain is a virtue for us that want. This works? Yes. Okay. Sorry, I didn't have my return. Transparency is a virtue from blockchain, but when you go to private finance, or private equity, or something, or traditional finance, you don't really want to be so public, no? So
yeah, exactly right. I mean, dark pools are a very large commodity in traditional capital markets, and so I think it's only natural that this sort of thing evolves and goes into the blockchain space. And so if like T+3 was a really cool thing in the 80s, and then T+1 eventually became like the really cool thing, and finality was a day-long venture, having blockchain like be immediate finality is really cool, but without like the actual ability to do finance how you normally would, it's quite difficult. So, and I mean in a private way, right? If you're trying to do an OTC order, you have a big iceberg that you're trying to get out of, you know, like a very large block of Tesla. Last thing you want them to know is how much you paid for it exactly, and how much you have to go, and who you've been selling it to for how much, right? This kind of stuff doesn't work, right? To distill it down a little bit more interesting is like a story in crypto, right? There was an auction that happened not all too long ago. There's this thing called Constitution DAO. I don't know if you guys remember. Actually, anybody show of hands, who knows about Constitution DAO? Yeah, only one person, sick. So the US Constitution, actually there's a bunch of copies of it, right? And there was one in private hands, and it went up for auction at Sotheby's. And this thing came together, it was called Constitution DAO. And they said, we're gonna buy the Constitution for the people, by the people, with money we raised by ourselves in a DAO. And they raised up, you guys wanna take a guess how much it was? $47 million in like a day.
Wow.
Yeah, huge. Power of crypto, right? Very beautiful thing that happened. But here was the problem. We knew exactly how much they raised, right? And so you guys, guess what the bid went to? It was like Price is Right, it went $1 over, right? And so just like rudimentary auction mechanics completely fall on their face when you don't have blinding in between humans. And this sort of is like a non-starter for capital markets. And in fact, I would argue that a lot of the price action that you see in the space isn't actual right and true price discovery. It's actually on-chain warfare. And we can see this on Twitter and things like this where people say, oh, I see this guy, he's gonna be liquidated at this certain price, right? When, what was it, Terra Luna, right, happened. They were like, hold on guys, we're about to deploy capital. And then they're like, dude, they don't have enough capital, right? And it blew up. And, albeit this a bit complicated example, it's just like, we could see that over time and time again, like without privacy, the mechanics have failed and it doesn't really make a lot of sense, and we'll just never see adoption otherwise.
yeah, I think it's one of the trade-offs or the negotiations that the blockchain space has to do with traditional institutional and traditional finance, because we come from a place of principles and and ethics that when in the moment that we have to start negotiating, we had to think about it. How do you find the privacy and confidentiality in finance nowadays, and what's the pros that on-chain privacy can offer to finance? Roman, you can get that. You want? I saw you nodding. Sorry.
Yeah, thank you for the question. I think in today's financial world on-chain, what we can see is essentially as you start transacting, you immediately reveal all of your personal information to the parties with whom you're interacting, but also to the entire world. One example is, imagine that I come to a cafe here in Buenos Aires and transact to buy coffee. Immediately, a barista learns everything about my salary, my net worth, what are like my purchasing habits, and this level of knowledge allows them to use the information to their own advantage, such as upcharging, and to draw the line of comparison with the traditional systems, like with banks, we have privacy by default, and I think we can achieve that on-chain as well.
Okay. Do you want to hop on that?
Yeah, I think that you know, I try to give like a really good example on auction mechanics, right? Because that's really what a lot of traditional finance is, right? It's an auction mechanic. You have a bid and an ask, and you try to meet somewhere in the middle, right? And this has like a really cool feature in it that you can see an order book and a flow, but you don't know who the actors are. And this is a really cool thing that can happen in traditional finance. But I think that what's really, really interesting about like crypto is if you think about like things like AMMs and you know, things like Uniswap and DEXs and this sort of thing, you have like this really cool programmatic money that happens on chain, right? And so you can look at the mechanics and see that you have like a certain price that can be executed. And you have like this verifiability that you're not going to get slipped to death or something like this. And so it's an actual verifiable mechanic on chain. And what we can do is with things like Railgun, right, is you could have a private address, right? So you have this peer-to-peer blinding. I can have a private address and I can execute against these auditable mechanics, if you will, right? So I can go and look at Aave, for example, and I can see that it's, you know, a very healthy protocol with lots of liquidity backing these loans and know that it's a very secure place. You can't really do that with traditional banking, right? Until it's too late and Wachovia gets saved by whomever and purchased, and, you know, we have these consolidation events that happen in 08, 09, right? And so we kind of have like this really cool blend that we can develop where we have this actor privacy that we're expecting in finance and money, but we can also have like this really new ability to completely get rid of things like 10K statements, right? I don't have to wait every quarter for somebody to tell me how their company is doing. I can just go and look. And I think this is a really, really beautiful thing that we can accomplish with crypto that we can't do with traditional rails.
Amazing. Anna is here, so I'm going to change the skin.
Ah,
I'm
yes.
going to let her here. Anna, please.
Welcome,
Hey
welcome.
guys, how's it going? Sorry for the delay, but Palermo is exploding, like 10 to DEFCON, so it was kind of difficult to come here. We already started the panel, so I was looking forward to have this conversation with you. I assume that you already introduced yourself, so we're going to skip that. My name is Ana Ojeda. I'm institutional BD from Noon Capital, which is a stablecoin infrastructure protocol. I've been in the past collaborating with privacy protocols, like for example, Hello Telos or Telos blockchain, which is a CK blockchain, more focused on CK tech. So I was looking forward to this conversation, as I think we spoke briefly last night, because what we're seeing today in crypto Twitter and in trends and people, the conversation is running around, you know, privacy. It seems like privacy is starting to be like that new meta or the new, you know, north that all protocols are, let's say, chasing. So what I want to know right now is, first, what do you see in the current financial system and in the current state of crypto? How do we can, let's say, bring privacy without compromising the AML, the compliance systems? Because one of the blockers that I'm seeing right now is that, you know, regulators, governments, central banks, and institutions, they're kind of against privacy because they think that privacy means, you know, being anonymous and not compliant with regulation. So I want to start in that part, if you want to go deep in that one specifically.
Yeah, I would love to. I think that this is like one of the biggest claptraps of privacy in crypto that exists, because what it presumes is that I can have confidentiality and compliance and that they're completely mutually exclusive. And I think this is a really silly argument against privacy because the reality is that I can have a compatible counterparty establishing regime where they can have actor blinding against me, right? So whenever I have, in fact, it sort of happens that way in traditional finance if you sit and think about it. Up until the point that I choose to reveal myself to you to get a loan, you don't know anything about me, right? So like if I go to get a mortgage for a house, right? If I go to buy a car or something like this and I get a loan, until I fill out that credit report or something and say, hey, you have permission to get my information, like you don't have access to it, right? I have actor blinding against you as an entity. And I think that's like something that's really sort of missed, because people frequently would just go straight to like, oh, well, you know, Sandy Nation arms dealers and like hackers in North Korea are gonna use these kind of things. And I think that it sort of fails to consider that like I can have an encryption standard for my finances that exist on chain, and I can be a good guy, I can pay my taxes, and when you ask me for my information, I can reveal that stuff to you as I so choose. And so things like Railgun, for example, right? Whenever you take and you generate a 0ZK address within this smart contract, you generate 2 keys. You have your spending key, where I have the right to access my money and spend it how I choose. But as a counterparty, if I need to reveal information to you, I can do that, right? So these things aren't mutually exclusive. There's also other things where if we're going straight to like AML, KYC, and trying to make sure that we're preventing bad people from getting money and terrorist financing and this sort of thing, right? There's plenty of tools and on-chain analytics that identify people who are doing these kind of things, and they can be prevented from using privacy pools and things like this, like Railgun deployed a proof of innocence mechanism back 2.5 years ago that completely prevents people from North Korea and things like this from trying to reuse the protocol. So I think we can really have our cake and eat it too, but I think it's a real bad education problem and a frequent straw man where we say like, oh, well, if we have complete transparency and the ability to audit everything live until the end of time, like we'll have the perfect way to capture all the bad people. But I think that this is a really bad systems to live in, you know, personally, because I think that like hyper surveillance just isn't good for personal security and freedom in general.
Yeah, absolutely. And actually, we have like some big precedents, like for example, what happened with Tornado Cash like two years ago with Roman and all the devs that basically were prosecuted for developing this, let's say, privacy tool. And there's one thing that I think it's very important to say. I remember last year, Chainalysis, they put out their, you know, their annual report about crime report on crypto. And they say something like in crypto, the total amount of transactions, let's say, that are coming from illicit money were around 1% of the total on-chain transactions against 13% in fiat. So I think
It's a complete rounding error to the money laundering happening in places and, you know, traditional
exactly.
finance.
I mean, and the best way to do it is in cash. Is still being in cash. So that's an argument that I often hear from, you know, from regulators, for banks, or obviously for people that doesn't want to crypto grow. And it's always like, okay, but crypto is being used to launder money through all these protocols and all these privacy tools. So that it's.
Well, I don't know if you saw this in the New York Times. It was actually, I think yesterday it came out where they were like, it turns out crypto money laundering happens on centralized exchanges. So the liquidity is not there in privacy pools to prevent. It's not there for them to be able to do. So I think that like this is a serious trope in the space that has to be like, it's hard because like people really frequently want to bring up bad actors in the space, and like I'm decidedly bad actor. The whole reason, just as a tangent, the whole reason I care about privacy so much is because it's very obvious that whenever you can be tracked online, live, in real time, with all of the money in your pocket, someone's gonna come and beat the hell out of you for it. It happens all the time. Just Google wrench attacks. In fact, there's a roving gang of people in the United States who are going around and beating up people for their keys. This is a serious individual security problem, right? We could even pull it out and say, hey, this is bad for nation states, right? And so like, it's such folly to say that like privacy isn't good.
Yeah, I want to go with Roman regarding this topic before we move out into another one, which is pretty hot, about CBDCs, because there's a lot of things happening in Latin America regarding that one. But I would love to hear your thoughts specifically on this one.
Yeah, I think I totally agree with Alan that these are like mutually exclusive. And to add to this with an example, I may want to have curtains in my house, not because I'm doing something illegal, but because I'm seeking simple privacy and avoid revealing information such as like what time do I have dinner every day, when do I leave for work, the information that can be used against me by nefarious actors. And still, like with privacy, we can keep full compliance. I'm actually, as preparing for this discussion, I was reading about privacy pools and found that design quite interesting that you folks at Railgun have implemented, as you said, a couple of years ago.
Yeah, it's really interesting, right? Because like one of the things that we kind of sort of like need to appreciate is that like with this sort of like blockchain, right? We actually have like provenance of funds like since the inception of the chain. And this is a really, really interesting thing because even with like privacy mechanisms like Railgun, where there's internal transfers and DeFi and all this cool stuff that you could do with your money, we can also take and make these zero knowledge proofs right? And I don't want to get into the topic of conversation. If you want to talk about cryptography, find me after, we'll talk about it. But what I could do is I can make private statements about myself and my money, and I can tell you definitively in a mathematical certain way that my funds are not associated with something, right? And so if you have like some sort of like specific rules as a counterparty that you're trying to establish so we can do business, we can do that in a zero knowledge way, and you don't actually have to know who I am at all.
Well, actually, now that you're speaking about CK Proof tomorrow, just a brief publicity, we'll be going in the Privacy and Compliance Summit, precisely talking about that intersection between compliance and CK Proof. I'll be doing that keynote, so it will be nice if you guys can attend.
I'll definitely go listen.
That will be amazing. So, but let's talk about, let me just give you a brief context about CBDCs. Obviously, I assume that most of you know what it's a CBDC, a central bank digital currency. And currently in Latin America, there's a few countries that are in a pretty advanced stage of developing a CBDC. One of them is Brazil, which has the largest economy of the region, and Brazil is pretty advanced with their BR1 or their CBDCs. And we also have Chile and we also have Peru studying the possibility of issuing a CBDC. And the argument, it's basically that cryptocurrencies are dangerous, cryptocurrencies are related with money laundering and other type of crime. So since Latin America is one of the regions that are using the most stable coins and crypto in general, what can we say about specifically one stable CBDC, starting to emerge not only in Latin America, but also in Africa and Asia? There's more than 100 projects being developed right now in a pretty late stage that are about basically to go live. We just know that also the Euro Digital, which is the CBDC of the Europe Union, it's going to be live currently Lagarde next year. So how are we envision the rise of CBDCs? I would love to start with Roman from Osmosis. And how realistic are to think that CBDCs are really going to start, to penetrate in the population, and people are going to choose CBDCs instead of stable coins, crypto, or any other type of currencies? What are the chances of it for success?
Thank you for that question, Anna. I think first I'd like to connect this to where we are today and where we have been. I think we started losing privacy while moving away off of cash onto a digital system where in today's world, banks already report all of the data on you for compliance, like various fintechs aggregate and sell that data. So we are already living in this world where your profile is being built out without your awareness. And with the CBDCs, we're essentially going into the direction of that being accelerated by multiple factors. And that's why privacy isn't optional. And
Alan, what do you have to say about it?
Yeah, I was trying to think about this really aggressively, but the truth of the matter, in my opinion, is that CBDCs are the antithesis of everything crypto. I think they're wildly dangerous for freedom. I think that the controls and the features that exist in a lot of CBDCs are very dastardly. And I think you asked a bit where, what do I think the likelihood where that's like a future that takes off? When I think about governments and their ability to execute on things better than the private market, I'm having a really hard time thinking of an example where that's actually been the case, right? So we can't name any really cool Russian car makers, but we know all the Japanese ones, right? And that's because the private market did so damn good with it. And so I think that if we zoom out from crypto and look at other places where centralized authority, that is the government, tried to take over from the private market, they had a really, really hard time doing that. And so I think that most people, if you hear the word CBDC, in my humble opinion, you should, say some particular explicitives to them. That would be my suggestion.
Okay, thanks for that. Well, we're almost finishing the time. We're basically flying. So I would love to know about the blockers regarding the UX experience. what do we need as users and also as institutions so we can start, to use more private tools? Are the UX very complex right now? So that's the reason why many people, prefer using centralized exchanges or any other type of products instead of using these kind of tools that you've been developing. What do you think is the blocker in terms of UX, if it's any blocker? If not, obviously explain it, please.
Yeah, I'll start. Thanks for that. So from the user perspective and trying to apply privacy tools and apps in my day-to-day, what I find is that we have incredible solutions that are concentrated on either in one particular ecosystem or on one functional area like web or mobile. Like, for example, Zashi, Pay are incredible mobile apps, but I find myself switching to other tools when interacting with on-chain activity on the web. Then a similar problem exists across the ecosystems. I'm yet to find a solution that addresses all my needs across all ecosystems. And this is what we have been thinking about at Osmosis, building out the cross-chain app without losing custody, privacy, or freedom. And how our technical stack looks on the high level is that we have separated custody from utility, and we utilize a Zcash style vault on Namada, which is a Cosmos chain, and place assets there for custodying. And then to enable the cross-chain operations such as trades, yield lending, we end up unshielding into an MPC private runner style solution that executes your intent no matter where you want. For example, on Solana, on Hyperliquid, and bringing that back into the shielded pool back on Namada. So I'm really excited about that direction to bridge the gaps of cross-chain UX and build this one-up experience.
So we have to end, guys, but I would love to know from you both perspective of the two projects, what are the biggest innovations or for next year for Regulon and Osmosis that you're working towards privacy? I will start with Alan. If you can share anything.
Yeah, don't worry. We'll do the hyper quick. So the biggest things that are happening right now is there's been a lot of collaboration with the Ethereum Foundation on new SDKs for integrating this kind of tech. It's extremely complicated, right? And so making it simple to do has been a big focus for us over the last year, and that'll continue to be a focus. There's a great new SDK for Railgun called Railgun Reloaded, which takes the 600,000 lines of code that are in community and distills it down to a little bit more less opinionated bit of code. So hopefully people will make it a little bit easier for them to use to build cool apps. We actually just announced private multisig, which is really, really cool. A lot of institutions really want to have a multisig that's private. So you can have private signers, you can have a private balance, and you can do that on Ethereum today, which is really sick. We got hardware wallet support, and that's coming out in Q1. And we're going to be doing some really sick transaction simulation stuff to seamlessly interact with DeFi. So if you're into really weird cryptography and really, really advanced code and you want to talk more about it, I don't know, come and find me.
For Osmosis, and we'll be ending the panel.
Yeah, so for us, we're excited to bring this model that I was just describing to life. And once where we currently are is that we have private custody on Namada and are able to privately swap on Osmosis and bring the funds back. but what we are going towards is beyond osmosis, and for that we'll be building more bridges to other ecosystems and integrating what is out there today. For example, to bring any Solana asset into your private vault on Nemada. So really excited about that. Plus also solving a lot of the technical challenges that are common to any privacy product today, especially shielded pools. The problem of shielded sync. There has been a lot of research recently from the Zcash Foundation, so we'll be experimenting with those tools and solutions to achieve this cross-chain vision.
No, thank you for that. Thank you for all, for the people who come today to hear this conversation. Actually, I think that privacy is not going to be like a feature, it's going to be a foundation for all the projects. Sadly, we are still in a pretty early stage, I think, where most of the users are not comfortable using privacy tools because they think it are like so complex to understand and to use. But I think it's what is coming for the next year, and the future of Ethereum and the future of decentralized finance, I think it's going to have always on focus the privacy. So thank you guys for joining. Thank you all for coming to this panel. I'm looking forward to continue the conversation all the way on DEF CON and all the site events. And tomorrow we will be talking once again about CK proof and compliance. So if this is anything that is interesting to you and you want to join, please join us tomorrow. So once again, thank you.
Thank you.
Thank you very much. Thank you for your time. Now we're going to free up the stage for the closing of this whole Sovereign Day. It was really interesting to explore. It was really interesting to explore all the interjections between the public sector, institutions, crypto. Wait, how many do you have in the... Hola. How many badges do you have? 270. Can you come to the light, please? Can I take a picture with this guy? So, can I take a picture with this guy? Thank you very much. Just built on Cosmos. Okay. Well, I will present Magnus. Magnus is co-CEO of Cosmos, and he will do the final keynote. Magnus, please.
Oh, do you have the little clicker?
Yes. I don't. Who has a clicker? Ahí. Para apagarlo.
Excellent. So just to start, thank you everybody for being here. We have about 3,000 people tuning in on the live stream as well. So for everyone back there, we appreciate you folks listening in and hearing, what I think is probably some of the best talks I've heard and the most applied talks around crypto in a very long time. Heard from McKinsey, we heard from a lot of local teams that are building things in Latin America, in Argentina. We heard from a lot of crypto native protocols, privacy protocols. And so for me, this is really exciting and an indication of how much we have grown as an industry. So just to recap, Cosmos is building the Internet of Blockchains. And I think the important thing to note here is that that internet is for everyone. One of the places that we're spending a lot of time and a lot of effort today is connecting economies in Latin America by building out independent blockchains on a per country basis. So that means working with different organizations, different interbank alliances, different governments to really figure out how they can take their digital currency and put it on a blockchain and make it more accessible. Once that's done, we want to connect those economies directly over IBC, and we have the technology that is built to do this. But the truth is, we don't want to stop there, right? we have the ability to build out independent economies on sovereign blockchains for multiple different countries and connect them directly. And so after we build out our initial pilots with all of these different places right now, including Latin America, but also including places in Europe, countries in Asia, we want to start connecting them, and we want to see what it looks like to have a more programmable financial system across the world. So I'm not going to speak for the full 10 minutes, but I wanted to end this way, which is the way that we view things is that Bitcoin was a prototype, right? It was a prototype for a better financial system. That prototype has downsides. It doesn't scale. And it also has an incredible amount of foresight in terms of decentralization and what it looks like to be censorship resistant in a world where institutions consistently change. And my argument is that Cosmos is the technology that was built to implement that. It was built to implement the global financial system reform that we wanted from blockchain and to implement that at a global scale. It was purpose-built to have the sovereignty properties that countries are built on top of. The sovereignty movement is something that defines our current landscape as a society, right? A global society. It was designed to take that into account and add the financial rails on top over IBC and over all the different primitives that we chatted about today. So, thank you. I hope this was an enjoyable conference for everyone watching. Thank you for tuning in, and enjoy the rest.
Well, we can go. Sorry, thanks. Well, we can go and have some drinks and enjoy the Malevo show.
Or maybe also we are a bit ahead of the time and people are still thinking of this. But I personally found it I totally see it, I totally get it. I've been working with